We have this kind of stability that we're talking about from Chair Powell, trying not to change too rapidly as the data come in. And then you have the market, which of course is going to change very rapidly, going to try to figure out where that next data print is coming in. And we had a series of 3 cooler core inflation prints. We had softer wage data. So I think it makes sense that the market got a little bit more excited about these outcomes where inflation just comes down of its own accord. And I think our job here as economists is to look at all of the data and really figure out what's most likely in terms of an outcome. And despite the slower price inflation, despite the softer wage inflation, looking through to the tight labor market, looking through to services inflation, we just weren't convinced that really anything had slowed down in terms of an underlying pace. And well, you see how it just takes one data print and all of a sudden the market is thinking more along those same lines.
Makes you wonder what happened to Jackson Hole Powell, doesn't it? What happened to Jackson Hole Powell?
The data caught up with them. These guys are ex-post. All of a sudden, the data's changed.
Massive change in tone. Andrew, thank you. Andrew Hollenhorst there of Citi. At times yesterday, it was comical. That exchange between Rubenstein and Powell. Neil Dutter of Renmac.
He was on fire.
Neil was great yesterday. He's firing me so many messages. This was brilliant. The fact that Jerome Powell believes $190,000 per year is a fair salary for chair of the Federal Reserve is dovish. Ask for a pay increase, Jay. That's what Neil had to say about that.
There's actually more to that, too, because at a certain point, you do see some pushback, particularly the ECB, some of the staffers saying, we want to raise, and the heads being like, well, we have to dampen wage pressures, and them kind of getting annoyed at that. So, how much is this actually a real sticking point?
Lisa, you featured Delta Airlines just out with this news, really, Richard Clow writing it up. And, the Andrew Hollenhorst thing on wages is Delta the future. I mean, it's simple. It's a 5% pay increase after 4% last year, 9% in 24 months. The pilots are 34% over 4 years. They're in negotiation, which is 8.5% per year.
They're desperate to find pilots, this industry right now.
But
desperate.
I defer to Helene Becker and others that know way more than we do, but you just wonder, is this what Hollenhorst is talking about, where companies just capitulate?
Did you see the potential pay rise for the Labour Secretary? You see these numbers?
I did not see the numbers, please.
I'll share the numbers. So you could go from $235,600 a year to be the Labour Secretary to $3 million. $3 million. And I don't think anyone's getting out the small violin for Jay either. He's gonna go out.
Yes.
He's gonna go out afterwards and get paid how much a speech?
All right. This is, to me, a really sensitive issue because people get mad about how much money they make after being in public office. But that's why they take jobs that don't pay that much. So if they're going to pay them more, maybe, I don't know. I think it's complicated.
A moment of silence. Farrow nailed it exiting the secretary's comments the other day when you talked to him about that.
He didn't want to go there, though, did he?
You were out front.
He said, no news today.
But
said,
tomorrow.
so news tomorrow.
There's only one
He's like, I cannot wait to get rid of this guy. Does he cover ice hockey too? I hope he doesn't follow me to the ice hockey circuit. I've got nothing to say to him.
The ice hockey circuit,
Big Bruins fan, Tom. Told me he's a big Man United fan,
Bruins
too.
fan, and there's a little controversy. Jeremy Jacobs, who runs the Bruins forever, ever, was a campaign contributor. So
did you see the puns? This has been brewing for a while.
Oh, is that what they said?
No,
if you're what? Go on, Tom.
No, he's going. This guy was one of the toughest union negotiators in the country. 35,000 angry, tough union people up in Boston. He's going to 800 prima donnas that he's got to corral.
I was told to always lead with the headline, and we haven't. So if you're just tuning in, you've got no idea what we're talking about. The Labour Secretary is going to go on to be the National Hockey League Players Association Executive Director. And good luck to him.
With your relationship, we should get Walsh and Bettman together.
Let's go do that.
That would be
Have a good time. All right.
Yeah.
From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In his State of the Union address, President Biden called the Russian invasion of Ukraine a test for the ages. And it's a test, he says, the U.S. and its NATO allies have passed. The president also vowed to stand with Ukraine's President Volodymyr Zelensky as long as needed. The pharmacy giant CVS is pushing deeper into healthcare. The chain has agreed to buy Oak Street Health in an all-cash transaction with an enterprise value of about $10.6 billion. Oak Street aims to reinvent care for Medicare patients with low incomes and chronic health problems. CVS says the deal will increase healthcare access in underserved communities. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
So many people recognize you because you have a very famous hairdo that I've asked you about before. But to some people, they may say, well, Ken, what happened? Where did that hairdo come from, and where has it gone? Because right now it seems a little different than what I've seen before.
Yeah, it's growing out a little bit, David. But COVID, you know, I ended up with hair going back down to my shoulder, and I finally realized that one of the things I had to do, I'm a very loyal person, and I used to have hair down to my waist in my college and my hippie days before that in Ann Arbor, Michigan, and I had it cut off in the summer of '75, and I've gone to the same person, now a grandmother many times over, who was a young gal cutting hair in Amherst, Massachusetts, and I still seek her out, and I finally just said to her, you know, COVID's enough of a change that I ought to be able to do something new.
The complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, one MDB wouldn't have happened. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
We're just at the beginning of this process. The disinflationary process, the process of getting inflation down, has begun. It has a long way to go. These are the very early stages of disinflation. We think that we're going to need to do further rate increases, keep rates at a restrictive level for a period of time.
This is what got the equity market bulls going last Wednesday in the news conference. That was Chairman Powell talking yesterday with one qualification maybe. The disinflationary process has started, but he started to lean into, Tom, this idea has started in goods, hasn't spread to services in a pronounced way, but that was probably one of the very few qualifications in the address from Chairman Powell yesterday. No real change from Wednesday.
Yeah, I mean, and frankly, I wonder if the 18 speakers today, and as you mentioned, Williams of New York Fed will give us some more visibility. What was interesting was the stock market ballooning on the initial comments, and then it tanked. And I was fascinated how the stock market worked its way back through the afternoon. I did not expect that.
Just
really.
trading on silly headlines that aren't really any different. At the start, he talked about the disinflationary process has begun. He repeated that with very few qualifications. The market rallied, didn't really push back against financial conditions over the last couple of months. Then at the end, there was this offhand comment as they returned to the labour market story and said, well, if it continues, rates might have to go higher. Okay, not much in it.
If you read the actual narrative, if you read the transcript, he's not that dovish. He's saying the same thing. And yes, he mentioned the word disinflation. Oh my goodness, everyone just bought on the risk assets. And that seemed to be what you did. But if you listen to what he was saying, it was nuanced. And it was basically saying, we're going to have to go further. We're going to have to raise rates to a higher level. We're going to raise rates again. He repeated that. This isn't going to be exactly a panacea for tech stocks.
Okay, not to get too philosophical, but if you say the same thing and the world around you changes, is the meaning the same?
I think that you do hear the tree. No, I think that you're right. The meaning does change because there is a political opportunity for him to say something about the market. And you know what? This does change something. And this data point is important. And that would have changed the tone in markets. I don't know. Maybe he doesn't have the consensus. Maybe he just doesn't have. You're right. You're right. That was notable.
We're going to find out, Tom, a little bit later with Fed speakers.
I think, we are.
I know you're excited.
It's as exciting as the auction process or reading the minutes.
Hey, watch it.
Can't wait. Joining us now as we mop up in the State of the Union, Leslie Vinja-Murray, who brings some real abilities here with Chatham House in London, head of their U.S. and America's program, and serious academics here on the oddity of Americans' movement out across the Pacific, movement out across the Atlantic. Leslie, let's go all Pacific here with China. The Washington Post had the grid of what was themed last night. Were you surprised how China was underplayed, how your world of foreign policy was underplayed last night?
I was. It was, I call it foreign policy minimalism. You had to wait. Not only was it brief, but it took a long time to get there. On China, I kind of wasn't surprised. This is a president that wants to resume diplomacy. He's made this clear from the start. And the last thing that he needs to do is to inflate the China threat. It's already been inflated by the balloon. The American public have seen it. They're all over it. Attitudes are hard.
Right.
Those Republican House committees are hard on China. So I think the president was a little bit cautious because he knows he has a tough road ahead on resuming that diplomacy that's been canceled or postponed between Blinken and others.
Dr. Finch-Murray, I think John Farrell's been really good at bringing us up repeatedly and not letting the business interests of America off the hook. How do you juxtapose the bipartisan angst of Washington and China with the fact everything in my kitchen is from China? How do we juxtapose our business relationship with our geopolitics baggage of decades?
Well, this is what Biden's pushing on, right? He wants to see, certainly I imagine, Tom, you have a very high-tech kitchen. He wants that tech produced and manufactured in the United States. That was, he didn't link it directly to China, but it's clear what he was saying. Let's make the semiconductor chips here in the United States. Let's manufacture here in the United States. Let's do jobs, the dignity of work. That is code in part for China has stolen your jobs, but he wasn't directly linking it. So you're right. Businesses want in. Those consumers it's not only about production, it's about consumption. Access to Chinese consumers matters. But this is a president who is very clear that it is about reshoring, nearshoring, friendshoring, and really about investing inside the United States and making, so much of what we heard last night was about not only jobs, but jobs with dignity, higher wages, taxing corporations. And, if he's successful, which I think it's going to be a tall order, a high bar to cross over, that tax on billionaires.
Well, I want to talk about the chip manufacturing and just bringing some of the tech home and dig in a little bit more. Gina Raimondo of the Commerce Secretary is going to be coming to New York to talk about that and how it's going to play out. Do you think that the investment as delivered and structured so far is sufficient to really bring some of the chip manufacturing prowess into the U.S. from the likes of the Taiwan Semiconductor Manufacturing Company that's consolidating its market share?
Well, it's obviously a start. It's a significant start. A lot of this will come down to not the money that's been agreed, but it's implementation. The devil is in the detail of implementation. But it remains a tremendously competitive space, as you have rightly noted. And China's looking at this, and the Chinese are worried. Leading Chinese economists have made it very clear that this is a significant challenge, will be a significant challenge for them. And they will be working hard to find other partners that can help them compete as well. So it's perhaps not as large a number as one would like to see, but it's a very significant first step.
Watching the State of the Union, Leslie, do you think that President Biden emerges even more as the front runner for 2024? Do you think that he delivered the performance that really turbocharges his candidacy?
It depends on who you are. If you listen to the response that we saw from Sarah Huckabee, who very clearly made this about age. I am the youngest governor in America, and President Biden is the oldest president in the United States. That plays very well across significant parts of the Republican Party. But in terms of getting that Democratic nomination, if he chooses it, he's very likely to have the support of his party. It's difficult to imagine anything other than that. And what he was doing yesterday was really putting tremendous energy, the visible energy, and engaging with his opponents in the House, demonstrating that he was on the front foot. I mean, that moment when they were heckling and he pulled them in unwittingly from their perspective into committing to holding on to Social Security and Medicare. So age is an issue. but he was really defying the odds. That was the intention in that speech last night.
Well, Leslie, you referred to Governor Arkansas, so let's finish there. The governor of Arkansas talking about age, I wonder if that's aimed at Biden or really aimed at her own party. I just wonder how competitive that field's going to be for the Republicans.
Oh, what I anticipate is, we anticipate seeing Nikki Haley toss her hat into the ring on February 15th. We're bound to see Ron DeSantis. We're bound to see Mike Pompeo, the former vice president as well, Pence, and then probably others, Glenn Youngkin, Kristen Sununu. I mean, I think the field is likely to be so broad that the risk, I think, that many of us anticipate is that plays to Donald Trump's favor at a time when he's really not doing especially well, even amongst those who previously supported him.
Yep, that party's got to figure that out, and quickly. Leslie, thank you, as always. Letty Vinjamuri there of Chatham House. Tom, I think this is where the conversation is going for the Republicans. You're going to have people in that party, and we talked about this about 30 minutes ago, that the biggest division is within parties. There will be people in that party in the primaries that just have one candidate. It's the former president, it's Donald Trump, and they're going to stick. They're not going to move. Then you're going to get everyone else diluted across a range of candidates. And Tom, as you work through the primaries, you're going to have to figure out quickly who you want to get behind if you want to defeat the former president.
I think I was at a convention, I'm going to guess 2004 or 2008, and I realized the convention wasn't about the party, it was about the narrowness. I don't even remember if it was Democrat or Republican, but the bottom line is, I don't think a large part of the audience understands it's not about Republicans and Democrats. This will be a process of left and right with the different phrases they have in the modern day, but it's just liberal conservative polarities within each party driving the bus. Frankly, we saw that last night.
We'll pick up on that story with Anne-Marie in about 30 minutes. Lisa, we've got some earnings, just briefly.
Yeah. Uber coming out, beating expectations. Revenue in the fourth quarter, $8.6 billion versus the estimate of less than $8.5 billion. More interestingly, seeing first quarter adjusted EBITDA way above where it previously
Unbelievable. There's a footnote here where the Abramowitz family led with that marginal lift.
I think you mean the King family. Uber up
Marginal
about
Uber
2%.
well.
Coming up, Sarah Hunt of Alpine Saxon Woods.
The top names in business are on Bloomberg.
Different countries are at very different places, so you actually cannot speak in generalities. We expect to see a rolling series of country recessions, but the vulnerabilities that amplified previous recessions around the world are not present. That omens well for a mild recessions when they come.
Nobody covers business like Bloomberg, your global business authority.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the world of politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Rates are going up now, not because of central bank speak. They're going up because growth is proving to be stronger than expected.
The strong labor market and inflation that does remain persistently high really doesn't support any kind of pivot by the Fed.
The reality is the equity markets and the bond market have not believed the Fed up to this point. They just don't believe it.
If you look at the statements alone from all of these central banks, they lean hawkish.
Right now, this labor market just continues to be a stubborn kind of nuisance here for the Fed.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning, good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Futures right now down a third of 1%. We heard from Chairman Powell yesterday. TK, get ready for this. The Fed speak.
And what we heard as well yesterday. But to me, from Neil Kashkari, from me, I want to know whether there's a consensus. To me, John, that's going to be the real question, whether you get Chair Powell actually trying to reflect.
I just don't agree with that. I don't care what all the individual presidents think. Nobody's dissenting. I mean, John, in England, Catherine Mann makes an adjustment. Everybody stands up and listens.
Lisa's right to flag this. Yes, it is different here. It is different here compared to the UK. For some reason here, they're very scared of dissenting.
Exactly.
I don't know why.
It's ridiculous.
But I think we are just getting to that point that you'd expect them to start dissenting when we get to the level that some people say that is sufficiently restrictive. We're done here. And I think other people will be pushing for rate hikes.
If you don't get any dissent, that actually has more power, because all of a sudden then maybe Chair Powell just, had a bad day or wasn't feeling well or wasn't feeling particularly, harsh in terms of his messaging, but the rest of the Fed officials are going to do that for him. It does matter when you have the consensus driving the messaging and driving the optionality in terms of how many rate hikes are left.
Kashkari gets a lot of stick, and I think we've given him some stick on this program, and sometimes it's deserved. I like the way he communicates sometimes. Just put out a blog. Put out a blog and just say how you think about the world. I kind of like that. I refer back to his blogs a lot.
You mean his Medium posts?
Yeah. Early January put one out.
Yeah.
Let's get to 540. You don't understand. There's a second phase to this. We need to hold. We need to hold. And I think he's pushed that story quite well.
He has, and he's been definitive, and other people have been less so. Well, the chairman, you're right. So this is really my question. Is the chairman trying to reflect the status of all of the Fed officials, or is he driving the boat, right? Is he the one who really is pushing back on this idea that maybe they have to be more hawkish than markets are currently pricing in?
Torsten Slok of Apollo. And I think he really owns this one at the moment.
Yes, he does.
Investors have been underperforming their benchmarks because they entered 2023 underweight equities, expecting a slowdown that still hasn't happened. The title of this research, Tom, is From Hard Landing to No Landing. It's that no landing theme that I think has maybe got legs after that payroll report Friday.
This is the theme into the weekend is everybody humbled, gets out in front of Valentine's Day inflation report. I don't have any words of wisdom on what the bears should do, what the bulls should do, but everybody's going to recalibrate with a vengeance. And frankly, John, the year starts March 31. Maybe February 14th is the new March 31.
Yeah.
Or I should say the 15th is the day of recalibration.
I think if you had the chance to rewrite your outlook be markedly different to what you wrote maybe in December. Let's
extraordinary.
get straight to it. We've got a great guest with us. Equity futures look like this on the S&P. We are negative after a day of gains yesterday, which snapped a 2-day losing streak. We're down about 1/3 of 1%. Lisa, yields are lower by 2 or 3 basis points. Your 10-year, 364.72.
So Tom asked for it. Let's deliver all of the Fed speak. We'll line it up. New York Fed President John Williams, Fed Governor Lisa Cook, Fed Vice Chair for Supervision Michael Barr, Atlanta Fed President Raphael Bostic, Minneapolis Fed President Neil Kashkari, and Fed Governor Chris Waller. Is that enough for you, Tom?
That's enough. Are we done?
That's all the people who are going to be speaking today. I am curious to see what the linear thread is. If there is a sense of going to 5.1%, 5.2%, Tom's growling. I think a lot of people are looking for this as well. We're also looking at the political tour.
That was actually a growl.
He actually growled to me.
Fed speak.
Yeah, but you know, maybe he's getting a little bearish. So I'm looking right now at what we hear, not out of President Biden as he goes to Wisconsin, but in particular, Janet Yellen visiting a battery factory over in Tennessee, and Commerce Secretary Raimondo in New York talking about what we're doing with semiconductor manufacturing incentives and how that could potentially push the chip sector. I'm just going to keep powering through. Earnings. We talked about Uber. I'm just trying. My goal is just not to be derailed. Uber shares. Let's take a look at that. Up 8.5% after delivering better than expected earnings, not only for the fourth quarter, but expected. The EBITDA for the first quarter is expected to be more than people had expected. I'm curious when we get Lyft later in the week, John, how much is this consolidation of market share, and how much is this that people are still willing to pay a lot of money to get from one place to another?
How viable are these businesses? And not just off the back of the zero interest rate change, but also off the back of what's happening with wages too. We've talked about this a lot.
Yeah, based on the fact that you're going to have to deliver higher wages to the drivers, at what point does it become feasible? Well, the results seem to suggest there's still some sort of, gas left in the tank, or, energy left in the battery.
Sure.
I'm just going to let that go.
Nice
Let's move
one.
on.
That worked.
Thanks, I tried.
I promise never to growl at you, though. Sarah Hunt with us, partner and chief market strategist at Alpine Saxon Woods. Sarah, this is great. Thanks for being with us.
Good morning.
Can I just start with that line from Torsten Slot, because I saw you at the corner of my eye, just sort of nodding along with it. What do you make of that?
Well, I think that, we've all been anticipating such a big change in earnings and everything else. And the fact that we're not getting it, you're not seeing it in earnings, really begs the question, what does that mean? Where do we go from here? And I think that his phrasing that way also changes the discussion a little bit, just because everyone is waiting to see how bad things are going to be. And I think that what that is implying is, hey, right now it's really not so bad. And this whole idea of which way we're going to land, it's like maybe we've already landed and maybe it's not such a big deal. Maybe it is. Maybe we double dip later. Maybe inflation picks back up again. I think the markets wouldn't like that. But when I listened to Jay Powell's speech the other day, I thought, how I learned to stop worrying and love the stock market rally by Jerome Powell, because it really seemed like all of the things that he had been doing prior in terms of, we need tighter financial conditions, we need this is not good, the equity market rally is not working. It seemed to be, we shifted, and all of a sudden the market was like, well, if he's not going to be yelling at us, then maybe it's okay for us to keep going the way we're going.
The punchline here is last year was the worst year since 70 this, or in the bond market 1788 or the 1930s, who's keeping score? And you hit the ball out of the park, over the wall, hit the cask and flagon across the Mass Turnpike. I'm doing it for Marty Walsh, John.
Keep going.
And you were down way less than you were down, but you were down way less than everybody else. How do you switch to a bull? I'm looking at the value line geometric index, and it's giving me signs of life. How do you switch to greater optimism?
Well, I think that, obviously for different people, you have different strategies. And so being able to deal with stocks last year that were good cash flow perspective, good balance sheets, good dividend payers, good buyback prospects that weren't just buying it back just to get the share count down, that worked really well last year. And this year, I think everybody came out of the gate expecting a bad year. I mean, we were already thinking that the pain trade was higher, but not this much higher and not this quickly. And I think that right now what's been running is a lot of stuff that I'm not so in love with. I don't think that you want to own the stuff that's high beta necessarily, and that is more of a rebound. But I also think that you're going to get more fundamentals are going to matter again later in the year. And you've got a snapback in technology. Everybody was underweight, right? So you come out at the beginning of the year and all of a sudden it's not so bad and people are just chasing stuff that had been beaten up really badly last year. But you already see some valuations that seem very high to us.
Well, how do you parse out what's fundamental and what's technical? And then whether you want to lean into the technical because there's more juice to run.
That is a difficult question. We try to stick with fundamentals because we're basically a fundamental shop, right? So what we're looking for is what is the prospect in an economy that may or may not be acting as well as people are expecting right now as we get through the rest of the year. Because I don't know that inflation is a one-way trip up and a one-way trip down. I don't think that rates are a one-way trip up and we don't pause, we just go right back down again, which is sort of what the market keeps implying. I think we get stuck at a higher level, and I think that over time sort of roots out some of the folks that really need money to survive and didn't have to borrow yet, but are going to have to borrow at some point.
Best chart I saw yesterday, Lisa, was from JP Morgan. Zero Hedge had it at the bottom of their afternoon report, was how lonely the equity bulls are. I had no idea how unloved the stock market is. It was a really sharp chart.
And you felt like connected with them. And
no, I don't have an opinion on it. I just think it's something I wasn't aware of the level of gloom that's out there.
Well, at least in the stated level, although perhaps people are trading somewhat differently. I'm curious, Sarah, just to sort of wrap up, you talked about how valuations are starting to look high. You don't want to lean into that, but there are other areas that look good. What looks good? What are you bullish on?
So if we don't have, if the economy really is getting better to the extent that people are excited about that, then I think that things like energy can work really well. They're going to be very lumpy, though, right? Because China's reopening. That makes a big difference. And this whole discussion last night in the State of the Union address, it's like, how much longer do we need hydrocarbons for? I would argue it's probably longer than a decade. And I think that there is a demand situation and a supply situation there that is not going to be resolved in an easy way. So we like that longer term, but there are definitely going to be entry points and exit points. We think defense stocks have gotten beaten up pretty badly on this whole argument about whether or not we're going to supplement more in the Ukraine and whether or not there's going to be a budgetary issue. I think a lot of that budget's already baked in. So I think there's some opportunities there too. And I think some of the older school economic, the old school, the old industry stuff, if we're really going to start reshoring and we're really going to start rebuilding in the U.S., then I think that you've got some real opportunity there for companies that play into that.
It's funny we're talking about reshoring at a time where a lot of investors here in America are starting to think about
So you start to say, okay, if the government's going to back off a little bit, then there's some room for them to run. But you don't have as much information on them as you do. That is definitely a snapback play.
a massive snapback.
Yes, and how long it keeps going, I couldn't tell you.
I've got no idea either. That's why I asked. Sarah Hunt of Alpine Saxon Woods. Sarah, thank you. It's great to see you. What a rally we've seen, Tom, with some of those names.
Yeah, well, in China, yeah, absolutely. And again, really off the mat as well. I wonder how they're going to bail out the real estate market. To me, there's always a circle here where the Beijing, as a generalization, filtered through the major cities, bails out real estate. It's, I don't know the details other than there it is every time. When's that happen?
Well, you get the snapback in growth off the back of reopening. It's very mechanical. You go from shutdown to reopening. That makes perfect sense. And then you've got the same structural headwinds, which are going to question how durable that rally we might see or that expansion in GDP growth, the acceleration we might get to.
Although I wonder if those Chinese tech stocks, they just mentioned ChatGPT.
Oh, yeah,
shares
AI,
just go crazy.
AI, and it's just like, bye.
Seriously, disinflation, AI, whew, absolutely.
Nuts.
Gangbusters.
Futures down 0.25%. Lisa Shallard of Morgan Stanley in the next hour. Looking forward to that conversation. Anne-Marie down in Washington coming up.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. President Biden's State of the Union address foreshadowed what could be his re-election stump speech. The president highlighted accomplishments on infrastructure, climate, and consumer protections in his first 2 years in the White House. But there was heckling from Republicans on Social Security and Medicare, the border, and other issues. Turkey has begun to deploy thousands of soldiers to areas struck by 2 massive earthquakes. They'll help in rescue and recovery operations. The death toll in Turkey and Syria has now gone over 11,000. Searchers are still pulling survivors out of the rubble. Ukraine's President Volodymyr Zelensky is in London today to meet with Prime Minister Rishi Sunak and later King Charles. Among other things, Sunak will offer to expand training to include Ukrainian fighter pilots. Zelensky will speak to the House of Commons at 8 a.m. New York time. Bloomberg terminal users can watch the speech on LiveGo. The pharmacy giant CVS is pushing deeper into healthcare. The chain has agreed to buy Oak Street Health in an all-cash transaction with an enterprise value of about $10.6 billion. Oak Street aims to reinvent care for Medicare patients with low incomes and chronic health problems. CVS says the deal will increase health care access in underserved communities. And the service that soared during the pandemic is now adapting to slower growth. Zoom is eliminating 15% of its workers. That's about 1,300 jobs. CEO Eric Yuan says the company's headcount tripled in 2 years. Yuan is reducing his salary and will give up his bonus. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Breaks. No one covers the world like Bloomberg.
Return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority. Season is here.
Big banks, that was the big story.
From the big banks to big tech.
Everybody is losing a lot of money.
It's a question of how high the bar is set.
Bloomberg breaks the numbers first.
A blockbuster number.
Blowing through estimates.
These guys are minting money.
With exclusive expert analysis.
Does this approach make sense to you?
We're going to have to make an acquisition.
This has quickly become just a really crappy business model.
I don't think their business is as broken as the world thinks.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
My Republican friends, if we could work together the last Congress, there's no reason we can't work together and find consensus on important things in this Congress as well. Let's remember the world's watching. Putin's invasion has been a test for the ages, test for America, test for the world. I'm committed to work with China where we can advance American interests and benefit the world, but make no mistake about it. As we made clear last week, if China threatens our sovereignty, we will act to protect our country, and we did.
The State of the Union address from the President of the United States. Some highlights there for you. We get some more in just a moment. From New York, this is Bloomberg. Alongside me, Tom Keene, Lisa Bravitz. I'm Jonathan Ferro. Equity futures right now down 1/3% on the S&P 500. Yields lower by about 3 basis points, 364. Some earnings behind us already. Uber, Lisa, pretty decent.
I mean, this to me is such a shocking response that you're seeing in stock markets where you're seeing shares up more than 9% at one point, not only beating on fourth quarter, but also projecting out in the first quarter better than expected earnings, which to me is just amazing considering that people left this company for dead.
Such a pain trade, isn't it? Some of these moves we're seeing, not just Uber, but let's just take the NASDAQ, make it easy. The NASDAQ's up 16%. Was that in any of the outlooks? to close out 22.
Rip-roaring rally in NASDAQ stocks and all the big tech stocks. And the companies that actually don't have profits are the ones that are doing best. Again, this doesn't make sense unless you're going back to a very accommodative world. So are people expecting we're going back to that, or are people just going, la, 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 let's buy what we don't have?
I would suggest corporations clear problems. Uber is a poster child of that. I don't know the details. Of course, I don't own any of the shares. I'm looking at the ANR 43 buys, 5 holds, 1 lonely sell. Mark Mahaney, who I adore over at Evercore ISI with Ed Hyman and Julian Emanuel. John, his target moves from a 35, trading, as Lisa mentioned, now in the 37. And Mr. Mahaney has a 75 price target published on Uber.
There we go.
These are things that don't get talked about. The enthusiasm's there. Why is it? New management, the facts change, they change.
Just quickly, you asked about whether people would pay money to have an Uber deliver your salad. Evidently they do, and they will, and that's part of what's driving this, is that people are still paying for takeout. So again, the disposable income evidently still fueling a lot of the gains that we're seeing there.
Savita Subramaniam over at Bank of America, Jill Carey-Hall, both of them in the equity division, have written about this a few times over the last year, and I think it's really important. It's important we talk about these issues because that's where the money went in the last 10 years. We invested in things like that. We didn't invest sufficiently, in the minds of many people, in the old economy, Tom, and that's why last year it was all about big energy rallying, energy rallying across the board the year before as well, and why these names suffered. I think it's way too early, and I know you agree with this, to say that some of these themes are out of the woods and here we go, let's get on with business. It's going to be a tough time for some of these companies.
Although I do think that you're going to see more consolidation. And we're
Sure.
going to get Lyft later in the week. And I'm wondering whether you see some of the demand from Lyft go to Uber as the strongest one, Tom, really does take more of the market share.
I just think it's profit, non-profit. And granted, Uber's got an EBITDA flip here where they're getting to a better place, but that's about it. She owns a high ground on usage of Uber in Washington. Anne-Marie Horton joins us right now as we pick up the pieces from last night. Anne-Marie, we talked more about the economy in our last hour in the State of the Union. And what I found absolutely fantastic was the body language behind this aged president of the United States. The focus was on the speaker trying to corral his Republicans. We all know that soap opera. Silent in the discussion is this vice president. What was your thoughts last night of Vice President Harris's place in this pageantry?
Well, she stood up so many times as the president made his speech throughout the evening, really important moments. She was on her feet, whether it was the economy, whether it was the president talking about abortion and the veto action he would take if any sort of legislation was to land on his desk. She was at her feet almost immediately compared to everyone else. And you juxtapose that to Speaker McCarthy, who was very polite. He did clap at a number of moments, but there were moments as well where he said that is not true when President Biden talked about the prior administration and the debt that they accumulated. There's a number of also moments, as you mentioned, Tom, when the speaker was trying to corral his, the rebels, you could say, in his group. Really the standout moment that I think the press by large is leading with this morning. And this is what this White House wanted to see. It was when conspiracy theorists, an individual who socialized conspiracy theories, Marjorie Taylor Greene, a representative from Georgia, got to her feet and was shouting liar when the president was talking about the debt ceiling and how there has been some proposals, and the president was clear, this is not by and large all of you, but it's true. There was a proposal from Senator Rick Scott of Florida about sunsetting Medicare and Social Security. And this moment, the president showed he was willing to have this debate with Republicans right on the floor. And I have to say, Mitt Romney nailed it when he said, this is becoming more like the House of Parliament. In that moment, you felt like it was almost PMQ for an international audience.
Anne-Marie, thank you so much for a birthday girl. Thank you so much for weighing in here. John, review this again as you did in the last hour.
You're going to get me in trouble. You're going to get me in trouble. This one, I'm going to say something that might be slightly insensitive, but here goes. This applies to both parties. American politicians are way too thin-skinned. Way too thin-skinned. When you think about the kind of back and forth that you see in Parliament, when I look at the vigor of interviews that take place between British journalists and British politicians, they are so much harder than what I see take place in America.
Yeah, I think you live that every day here. Yeah.
They seem to be disarmed by the office that the individual sits in.
Yeah.
Although I'm curious whether the attacks, the personal attacks, are of the same nature or if it's about policy. in Britain.
It's about policy, and I think that's a really good distinction, and I wish it was more about policy in the United States.
Could not agree more.
I wish we saw more of those exchanges over policy, and we don't. What we see, get off the phone.
I'm with Ken, the Yankees fan. I said cut him
Well,
some
you
slack.
mentioned sports, so let's pick up on that.
Okay.
Politics in America feels like sports to me. You have various sports channels that support various sports clubs, and the individuals from the individual clubs go on their representative sport club TV channels, and that's all I see. That's all I see take place in the United States, in the media and with the politics.
A lot of people talking about the reality TV aspects of a number of different moments in yesterday's speech, and not least of which was liar, right? And this is really the question, which is, do you see a splintering between politicians that do want to talk about policy and then those that really are sort of appealing to the social media crowd and to the club?
Well, you mentioned social media. When you look at what happens, let's say Chairman Powell goes down to Washington for the semi-annual testimony, and you see a congressman congresswoman make a point, and all they're really doing is trying to make a clip to put in a highlight reel to send out a video to their electorate. And I think that's problematic. When I look at the Treasury Select Committee with the Governor of the Bank of England, it's boring. It's all about policy. It should be boring. It should all be about policy, but unfortunately it's not.
Well, just really quick here, Anne-Marie, before we let you go, and I know you are standing out there in the cold, what's going to be most clippable from last night's speech?
I'm glad I set up a great debate for you guys in New York. That's my job. Listen, it's going to be the liar moment. That has already become, I mean, within 10 minutes, it was a GIF on Twitter. That was the moment that everyone is pointing to. And this is the moment that, talking to officials at the White House, they wanted this moment. The president looked nimble. He was on his feet. He was also very reasonable. He didn't start to shout. He said, I'm more than happy to converse with you. And then he nailed it when he said, I'm glad we are unanimous in this moment. So he's basically taking a little bit of a higher ground on the debt ceiling debate, and also showing to the American people you can have a reasonable individual, someone who doesn't go for the showman type tactics, or you can have a Republican Party that has a number of rebels. Now, obviously, this is just a handful of individuals. You had people like Senator Romney, who was appalled with some of this behavior. But to Jonathan's point, this happens all the time in other countries, and I guess for the U.S., it's something new.
Anne-Marie, thank you. Down in Washington, fantastic to catch up with you. MH on the latest, Tom, from the State of the Union. I guess looking forward now, it's about whether the president throws his name forward and says, let's go, 2024.
There's so many, the options here are extraordinary. And what I would suggest is, can you imagine the debates? When do the debates start? Like late fall, maybe?
I think they've already started.
Spring?
They're just on social media.
But, what is going to be? 8 people from each party, 16 people yammering here? I still like the British way better.
Just get it done.
Third week of August, let's go.
Seems to be more straightforward. Futures down 1/3 of 1% from New York City. This is Bloomberg.
you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane. We refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
Equities lower, shaping up as follows. Down 1/3 on the S&P. On the Nasdaq 100, we look a little something like this. We're down a little more than 1/10%. The small caps, the Russell, down 1/2%. Into the bond market, off the back of Chairman Powell, yields still through 440, but they come in just a little bit on a 2-year, down 2 or 3 basis points to 443.96. On a 10-year yield, down 3 basis points to 364.15. The curve inversion, 2s versus 10s, still in and around -80 basis points. Thinking about the ranges we've been through, we've talked about this a lot over the last couple of days. The 2-year, very close to 4% on Friday morning. It's up about 40 basis points since then. Think about euro dollar in the range we've seen in the last week. As high as 110, as low as 106, and right now, Lisa, 107.47.
And bouncing around, although a lot of people still seem to have some conviction that we're not going to see the dollar strength that we did last year, at least not in any kind of linear fashion. Taking a look at some of the names that have been reporting and that are moving in the morning ahead of the open. Uber shares, we've been talking about that. Those now up more than 7% in pre-market trading, $37.40, after reporting better than expected revenue for the fourth quarter, but also better than expected EBITDA estimates for the first quarter. And to me, the question is, how long can you get gains with respect to ride-hailing services and food delivery at a time where supposedly consumers are going to be pulling back? It doesn't seem to be happening yet. Revenue rose 49% in the fourth quarter, just to give you a sense. Meanwhile, Under Armour shares up 8.4%, raising its profit forecast. The holiday season was strong. Again, is this a retail story, or is this a bifurcation between Under Armour, the direct-to-company kind of sales, and the Macy's, the other department stores that aren't maybe getting some of those sales? And this is what people are parsing through. Chipotle shares down almost 5%. It's kind of a mixed bag here. It was weaker than expected earnings with respect to same-store sales growth and the margins, but a more constructive tone for the first quarter. So hard to really parse out. But John, I mean, honestly, the earnings have been pretty dramatic in terms of spurring a response in markets based on a beat or a miss. But then it all fades. And actually, after a couple of days, if you have missed, you actually see the shares rally again. So it seems like it doesn't really matter.
Are they struggling with costs still?
Chipotle. They said that they did see margin compression in the fourth quarter, but they did see more constructive going forward. It's a tricky time because you're seeing disinflation in food, which should be a good thing, but it's actually proven to be a little bit more complicated for some of the restaurants.
And the labor issues as well at the restaurant level. Tremendously difficult. The Fed's got to do something about this, apparently. Fed speak today. Williams Cook, Bar Bostic, Kashgari, Waller, all on the docket. Bramo's gone through the Times, just tons of it. Ed Al-Husseini of Columbia Threadneedle weighing in on the Fed's path forward, saying this: real rates across the curve are significantly above 21 levels, and markets are pricing monetary policy to be restrictive well into 2024. In my view, this increases the odds that the Fed will be pivoting to a pause in March. Drumroll TK, there's a call.
Some adjusting, and Ellen Zentner at Morgan Stanley adjusting just in the last 24 hours. We'll have to see where that goes. This is an important and timely interview on where we are and what we're going to do in economics. Ed El-Husseini is with Columbia Threadneedle. He's senior interest rate strategist, but his path goes from Colgate University, where it was 20 below zero a few days ago. That's how you do math and economics at Colgate. You can't go outside. And on to Harvard with a guy named Summers. Let's cut to the chase on the quality of disinflation you see now really worldwide. This is a major debate now into the inflation report. Is it a 70s fear? Is it a Korean War rapid disinflation fear, or is there something else going on that Columbia Threadneedle sees?
I'd say there's something else going on, and that's really the centrality of the labor market to the inflation story. And I think that the Fed's done a really good job of putting it there in the course of the last year. We're seeing, particularly in the elements of the labor market that are important to inflation, that's wages, we are seeing a pretty rapid decline in the pace of wage growth without damaging the core of the labor market in terms of employment. So that's a really good disinflationary momentum story in my mind.
What does the Fed do? What are the signals they do to get this right? Not to the next meeting, but over the next 3 or 4 meetings.
I think they're doing what they can, which is you got to stay flexible, right? I think in yesterday's interview, the most telling part of the interview was Powell telling us, look, the data can only get you so far. You've got to have a story, and you have to have a story and a narrative around what's driving the inflation process. From the Fed's perspective, again, go back last several decades, there hasn't been a stable story around what drives inflation. They change it quite frequently. They changed it very aggressively last year. And this year, they have to be prepared for some surprises.
Although, do you think that there's some story behind the change in tone from Jay Powell?
Consistency, I would say. Look, they started messaging the arrival of this pause, the transition from raising rates to pausing. They started messaging that last fall, right? Last October. It's been a very consistent message. They remain on that message, despite data surprises. And I think nothing's really changed that trajectory in my mind.
Right now, we're looking at a number of stickier elements of inflation, and there's sort of this bifurcation between the services side and the goods side. How do you parlay that into a view on how long the Fed's going to have to keep rates at 5%, 5.1%, as the market is sort of seeing the terminal rate?
Honestly, it's impossible. No one can tell us that conclusively right now. Is it possible that after some pause, the Fed will have to raise rates again, make some adjustments higher? Absolutely, you can't take that off the table, right? Is it more likely that they have to adjust rates lower, either whether it's to neutral or potentially much lower in the event of a recession? Absolutely, I think in my mind, the odds skew in that direction. The timing of this, it's hard to say.
You sound like you need more data, except people have to invest now. Yields are doing odd things. Where on duration, where on quality is Columbia Threadneedle?
We're up in quality. I mean, look, if you look at credit spreads have compressed quite significantly in the course of the last 3 to 4 months. Inflation and rate volatility has come down, and that's been a massive tailwind for risk. And we see that, now potentially we might see that volatility go sideways, potentially a little bit higher as we get some surprises. So valuation in credit is
right.
I think not super attractive.
What's your 2-year bet here, though? I mean, on a single point basis, let's play your market economic strategist here. What's your two-year yield bet?
Look, when I see twos approaching 450, that's a very attractive level for me. I think we can have an argument inside of twos in the Eurodollar space, whether the Fed, markets are underpricing the pause, underpricing the terminal rate. Those are pretty small elements right now in the story. We're not moving in 75 basis point increments anymore. 2-year yield at 450, that's pretty attractive.
4.44%.
Pretty close to that level right now, yeah.
Get my buy ticket.
There's an issue, Ed, as we look forward to the U.S.-Europe divide. And people have been betting that Europe will actually be more aggressive with rate hikes and will be a more successful economy relative to expectations this year. Based on positioning, has that story been told already in the price action?
Not yet. I would say there's still room for European rates to underperform the U.S., just based on the fact that the European rate hiking cycle is significantly behind the Fed's. And if you look at the consumer space, the U.S. consumer is softening, perhaps a little bit faster than the European consumer. And particularly expectations, if you look at expectations for growth in Europe, they really hit the floor at the end of last year. And so if you look at where there is room for inflation and growth expectations to be revised higher at the start of this year, Europe is it, much less so in the US.
So do you think that it's time to actually lean into the euro versus the dollar, to lean into international, the story that everyone's been saying since the beginning of the year?
Look, the euro's also gone a long way. I like the yen story a little bit better, from a valuation perspective and in terms of some surprises from the Bank of Japan. You know, right? If we're talking about where we are in the tightening process globally, the Bank of Japan has done very little to nothing at this stage. So to the extent that there are some surprises there, wage growth, inflation moving higher in Japan, to me, is a much better backstop to the yen than the euro.
Before we let you go, let's double down on that, because we really haven't talked about that. Wages coming in, the wage increase in Japan at the highest pace going back decades. This idea that there was some rumor of a potential successor to Kuroda that was then, questionable, but that he would stay the course. What is the bet that you think is actually least vulnerable to some sort of whipsaw there, based on the potential for a real market shift that a lot of people say is inevitable?
Look, I think you can be both short rates in Japan via futures. You could be long the yen versus the dollar or versus some basket of developed market currencies. Both of them are quite attractive. The question is timing and how much premium are you burning? How expensive is that bet to hold? I think obviously being short rates is a little bit more expensive, but I think both are relatively attractive. That particularly if you look at it versus duration in the U.S. If you're long duration in the U.S., being short duration in Japan is a lot less painful from a cost perspective.
Ed, thanks for being with us. Great to have you with us in the studio.
Thank you.
Thank you, buddy. Ed Al-Hassani there of Columbia Threadneedle. Looking ahead to the BOJ's last decision with Governor Kuroda too. What's that, Bramo? A month away?
Yeah, and then who's next, right? And there was a rumor that it was going to be one of his deputies who was, very much going to continue his policy, and other people saying it's impossible. Look at the wage gains that you've seen. Look at the actual inflation. They're getting what they wanted. Aren't they going to have to push back at some point?
It's going to be really interesting to see the inflation dynamics in Japan. To me, it's not something in the textbooks. This is a managed reflation. Reflation's a really odd concept. And at the minimum, it's original. There's no like data dependency or ex post or ex ante. It's just domestic policy to avoid 20 years of some. Martin Feldstein was brilliant on this.
Let's use that word managed. It's a managed market too. They're going to step away from that. They've gone so much further than other central banks have.
Well, and the debt ratio, somebody had out the comparative debt ratios today, and we forget where the Japanese are. It's going to be sports.
Don't they own equity ETFs over there at the BOJ as well?
Yeah, something
do they? I didn't know that.
60%.
Is it 60%?
It's something insane. It was a bunch of years ago.
When they're trying to coerce certain companies to get in that index, to do certain things and change the behavior.
It's not a market. They own the market.
Certainly not a market.
So then how do they become a market? Right? Do they become a market? Or is it just sort of be a managed kind of... Yeah, and there's no evidence. And to be honest, when I speak to some investors who are invested in Japan, they're not counting on any kind of quick shift because they say this is not a regime that likes
We're going to allow
changes.
some price discovery, but just a little bit.
Exactly, and then we'll tap
on that
down.
note, can I give you a bombshell?
Please do.
Speaking of discovery, Warner Brothers Discovery completely backs away from the blah, blah, blah of the last 6 months. John, you're better at this than I am. They completely capitulate from that we're going to combine everything together. And this, the Wall Street Journal has this Jessica Tunkel and Joe Flint. And the basic idea is they're going to keep apart HBO and Discovery. They just completely walk away from all the synergy garbage we've heard for a year.
What do you think's behind that, Tom?
They looked at the number, they did research on the number of people that are saying no to their folly. That would be my guess. I defer to Mr. Sweeney on that.
From the Journal just moments ago. Is Paul in today?
He's got all my vacation. He's got Ed Al-Hassani's vacation days.
That's rude.
I know it's rude, but that's what Sweeney would do.
Ed, thank you, mate. Thank you very much. Setting up the conversation to continue with Bill Dudley, the former New York Fed president, and now, of course, a Bloomberg opinion columnist. He'll join us in about 50 minutes' time.
Oh, good.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In his State of the Union address, President Biden called the Russian invasion of Ukraine a test for the ages. And it's a test he says the U.S. and its NATO allies have passed. Meanwhile, Ukraine President Volodymyr Zelensky is in London, where he met with Prime Minister Rishi Sunak. He'll address the House of Commons at 8 a.m. New York time. Bloomberg terminal users can watch that on Live Go. Turkish President Recep Tayyip Erdogan visited the disaster area today that was struck by two powerful earthquakes on Monday. Tens of thousands of soldiers are helping with search and rescue efforts as the death toll in Turkey and Syria pushes past 11,000. Many people are still trapped inside buildings damaged by those quakes. Meanwhile, Turkey's stock exchange has suspended trading for the first time in 24 years. A sell-off after those two quakes erased $35 billion in value from its main equities gauge. No word yet on when trading will resume. Credit Suisse is adding to turmoil in how the firm handles employee compensation. Bloomberg's learned that the Swiss lender will pay bonuses in installments to some of its junior and mid-level bankers. Credit Suisse is overhauling operations after a series of scandals and deep losses. In the NBA, Los Angeles Lakers star LeBron James has broken the league's career scoring record. His jump shot against the Oklahoma City Thunder eclipsed the mark of 38,387 points that was set by Kareem Abdul-Jabbar. Now, tickets for the game sold for as much as $80,000 in the secondary market. Crazy. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, one MDB wouldn't have happened. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Fade this latest rally. We still think it's probably a bear market rally, a la 4 or 5 of them in 2022, and probably fails into resistance and eventually comes back down before you move higher. Earnings growth is just now turning negative, right? In the last 20, 30 years, we've only seen that happen 4 times. Every time we've seen it happen, it ends up being a recession.
There are certain strategists, investors I could listen to forever. Darryl Cronk is one of them. Such a calm voice when he talks about markets. Of Wells Fargo Wealth Management. Just great to catch up with him yesterday. Futures right now down 1/3 of 1% on the S&P 500. Yields look a little something like this, down a couple of basis points on a 10-year to about 364.72. Not much going on euro dollar, but crude making a move again, up 0.9 of 1% to $77.80.
It's going to be interesting to see. Within the data, John, I'm still looking at a highly accommodative trend off of Bloomberg Financial Conditions Index. We haven't talked about it this morning, but 0.30 has become a positive 0.42 standard deviations. I haven't done any technical work on it, but the trend's in place away from restriction.
The exchange between Chairman Powell and David Rubenstein was thoroughly entertaining yesterday. Just one regret. I wish that was something we just just pushed on a little bit more. How does he think about financial conditions? What goes into,
Yeah.
you know, we look at the Goldman index, we look at the Bloomberg index. What does he look at?
Right.
I think Chicago Fed has an index as well, right?
And there's
what does he look at?
And there's also the bank tightening or loosening of lending standards, right? Which some people have been pointing to that you have seen a tightening. Do they look at that? Is that something that they put more emphasis on? That reaction function, I mean, what did Sarah Hunt say? How do you learn to love the stock market rally? It seems like that was sort of the takeaway, and he didn't push back on that.
What was your message yesterday? The courage to be bearish. To be bearish.
Yeah,
How brave do you need to be bearish into Fed speak like that?
Well, you know, pretty brave actually, because he's not going to push back. He's not going to actually say, you know what, guys, please, I need you guys to actually sell off for us to transmit our policy.
That's the biggest change, I think, from now and in Jackson Hole, Tom, and for much of last year, for that matter, too.
Yeah, and we move forward to the huge number of speakers today. Do we know what time William speaks? Is it 9-ish?
9:15.
Yeah. So are we taking it, or what are we doing with that?
I think it's a Wall Street Journal.
But you'll have the headlines.
I'll take the
You'll
headlines.
have the headlines and all that.
Mike McKee
Yeah.
will bring you some context, and he'll listen in, hopefully.
Okay, let's do this.
Make that happen.
Let's say that today is important, and we have the right person to talk to. Long ago and far away, there was a hope and prayer that the Roberts family of Philadelphia would somehow invest $1 gajillion, and at one point, Comcast would go cash-free positive. And I remember that day, that quarter report, where they flipped into what the hope and prayer would be. Mandeep Singh from Bloomberg Intelligence on this day for Uber. Is this the Comcast equivalent for Uber, Mandeep, where they finally go to a vector that says cash flow positive?
I think so, Tom, and I think things are aligning well for them in the sense that you have a nice tailwind from reopenings, I mean, international travel. And look, I think Uber, we know anytime a company is a verb, they tend to do well, they have those network effects, and it shows up in this print where mobility segment growing 37%, you know, at a $14 billion one quarter run rate for mobility bookings. It's pretty impressive, you know, the fact that they continue to grow at this pace, and inflation seems to be a nice tailwind for this company, unlike in a lot of other cases where you could argue, you know, inflation may lead to some price elasticity, and that we are not seeing that in Uber, and I think that bodes well for this year.
Your colleague in crime, Anurag Rana, talks about the addressable audience 5 years out for the cloud business. Is that the same way for Uber and their arch competitor Lyft? Is there like a future audience out there like the cloud for the driving car business?
Well, so consumer tech businesses are very different. And in this case, I think the way to think about it is all the, you know, startups that were coming up with new ideas to subsidize this market and, you know, attack a niche, they're going to fade away because the spending environment, you know, the VC spending has changed. And to me, that is a sign that it will be, you know, one or two companies in this space, which is great for this market. I think it should be a duopoly like, you know, a FedEx or UPS. They're never going to get to the margins of software or digital ad companies. I don't think that will happen with Uber and Lyft, but at least, you know, you can see them getting those scale and network effects, and that is what will drive profitability and free cash flow.
One cliche coming out of the pandemic was that suddenly people were willing to pay $10, Mandeep, in order to get a salad delivered to them or a sandwich. And apparently they still are, because their Uber Eats unit actually delivered a greater profit than people had expected and accounts for 47% of Uber's overall revenue. How long can that continue into what some people still think is a slowing economy?
Well, so there will be that cyclical element, and look, I think if there is a recession or you know, some sort of a slowdown, people will pull back. But again, I go back to my point about marketplaces are all about supply. If you have the most supply, you know, ultimately, you know, you have to adjust your pricing, but volume may go down here or there. But you will continue to be the place where, you know, everyone comes in, both from a consumer standpoint as well as a supply standpoint. And that's a great position to be in. And I do think, you know, Uber being that verb that everyone has, you know, on their phone or the app that, you know, you're unlikely to delete, where you will bundle everything, you know, you need from a ride sharing or delivery perspective is a good position for them.
Mandeep, you keep touching on consolidation of market share, right? And whatever business you're in, if you can consolidate this, then you can win regardless of the cyclicality of a business. How much is Uber really standing out as not necessarily a part of a duopoly, but more than that, how much are they going to cannibalize from Lyft's earnings that we get later in the week?
I think you will see the pressure of, from cash burn for a company like Lyft, which has to show profitability, has to show free cash flow, and it has to come at the expense of expansion. So Lyft, for example, can't invest as much in supply acquisition as Uber can because Uber has the scale and, it can figure out the geographies they want to focus on, the profitable ones. Whereas Lyft is at a point where it has to show incremental free cash flow, improvement. And that is a hard position. I mean, DoorDash is somewhere in the middle, but that's what I mean by the smaller vendors, like Instacart, like GoPuff. I mean, there were so many vendors. There was a time when, they were attacking these niches, and that I think will fade away. And you're at the point of consolidating all types of delivery, whether it's grocery, food, any sort of convenience delivery. And that is a good spot, for the companies with scale.
Mandeep's right. You Google, don't you? You don't Bing. Isn't that the story here?
They're actually trying to change that now with ChatGPT.
They've been trying for 30 years.
You ever say, call the Lyft?
Right. It's you Uber somewhere,
yeah,
and it's
Uber
becoming a verb. It's
you Uber on Lyft.
Yeah.
You Google, you don't Bing.
Right.
What is? Do you Bing?
I don't know if that means the same thing, but I do
Mandeep,
think.
thank you. Yeah. Anyway, let's park
move
that.
on.
Mandeep Singh. You're killing me. I wasn't even going there. Mandeep Singh of Bloomberg Intelligence will catch up with Malaysia. This is lost on Tom. Thank goodness. Lisa Shallett's going to join us shortly. Tom from Morgan Stanley to talk about this market. How about that market? Futures down 0.5%.
John, an image from the United Kingdom through a window of war. There was a direct hit on Westminster Hall and the House of Commons, and the window was torn out as 3 people were killed in 1941, and there's going to be a discussion of war today in front of the British elite in the same historic hall where the funeral was for Queen Elizabeth.
Yeah, oldest building in the parliamentary estate, I think, Tom, that you're looking at right now. Look, this is an interesting time, isn't it? Because Zelensky did all the tours of parliament that you can think of in the last 12 months. And at the time when it first started, each and every single one of them got a ton of attention. Tom, I have to say it's getting less and less attention at the moment.
I agree.
And in the United States, I think the story will be focused on this year is how much unity there will be down in Washington to carry on supporting this war effort, because it is check after check after check. And I think the Republican parties are pushing for a little bit more oversight, Lisa, on that effort.
Well, especially after the reports of certain types of malfeasance among the leadership that have since been fired in Ukraine. But this really does raise a question. How much longer can the aid keep coming at a time where Vladimir Zelensky is saying this is actually the key time to get ahead of the Russian offensive before the winter's over?
I went back and forth with Maria Tadeo, who's really on top of this story, and she said simply, get out the calendar. It's just that simple. And it's like, frankly, John, it's like every other war, including, World War II and what happened to the House of Commons. Then there's a spring offensive, and spring is upon us. We're seeing that in New York City.
I can't believe it's been a year.
You can't believe it's been a year.
Can't believe it's been a year. And Tom, you've seen this in conflict after conflict. The longer it goes on, you start to get this fatigue outside of where the conflict is taking place. And inside in Ukraine, clearly, there's no fatigue there whatsoever. That's the urgency and the immediacy of war.
They're defending their home. So it's not exactly fatigue. It's we got to get through this, which is really the message that you keep hearing.
The rest of the world just doesn't seem to have quite the same urgency as it did maybe 9, 10, 11, 12 months ago. Equity futures right now down 0.4% on the S&P. Looking forward to catching up with Lisa Shallett over at Morgan Stanley Wealth Management. We'll do that in a couple of minutes' time.
To name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
The top names in business are on Bloomberg.
Different countries are at very different places, so you actually cannot speak in generalities. We expect to see a rolling series of country recessions, but the vulnerabilities that amplified previous recessions around the world are not present. That omens well for a mild recessions when they come.
Nobody covers business like Bloomberg, your global business authority.
No one can claim that climate change is somebody else's problem or shrug it off for future generations to address. We're all affected by a warming planet. We see that every day. And decisions being made right now will determine our shared tomorrow. So we must choose, and we must act as united nations ourselves. Our progress depends on collective action, on collective ingenuity. If we stick together, we can make fixing the climate the greatest project and greatest achievement of our lifetimes. We have the science, we have the solutions. Now all the world needs is political will. Together, we can create a future where rampant carbon is removed from the atmosphere, where green buildings and green business transform the livability of communities.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
The spending slowdown is continuing. I think these hiring freezes, cutbacks are continuing.
There's some areas of the economy that are really, really slowing pretty quickly.
If the data surprises, you're just going to get a more hawkish Fed.
If we continue to see interest rates remain high, I think all valuations then would be at risk of rolling over.
We would fade this latest rally. We still think it's probably a bear market rally.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. We're going to fade the hour for you with 422 Fed speakers today. Only Bullard of St. Louis is not speaking today. We staggered at 9 a.m., and we're going to hang on every word of Williams of New York.
Of the New York Fed, that comes at 9:15. I think we all wanted to know how this Federal Reserve would respond to that blowout, monster, upside surprise payrolls report on Friday. We got an answer from Chairman Powell. For Chairman Powell, it validated the current Fed stance. It didn't change it. And that'll be news to people, Tom, who were looking for some pushback. We didn't get any. And this market rallied pretty hard into the close yesterday.
The character into the close yesterday, exactly right, John. I see it with the VIX 18.90. And we really don't pull back today. And it's just a market. Maybe it's a wall of money that just needs to go somewhere.
I know this is stating the obvious. It's all about the data now. I think in the last 12 months for this market, if you rallied too far, you ran the risk that the Federal Reserve was going to lean against financial conditions. They were pretty clear about it. They didn't want equities higher. I think Neil Kashkari even said it to Joe Weisenthal and Tracy Alloway on their Odd Lots podcast. They didn't want that to happen. Now it seems to me that we can rally and Chairman Powell's not pushing back too hard. We are just at the mercy, Lisa, of the incoming information, and the next big print is next week.
And this is the reason why perhaps people are rallying on his comments, because because perhaps Fed officials don't necessarily see market activity as part of their tool to distribute monetary policy to the same degree. That said, just to give you a sense, Tom, of how difficult it is to gauge inflation, used car prices were one of the biggest drivers of disinflation last year. Now they're popping back, and this has to do with the compositional effects of leased cars that didn't necessarily make it out because of some of the distortions of the pandemic now not being sold in the fleets. But either way, it's really notable.
I'm going to go to the great David Rosenberg, who invented this at Merrill Lynch years ago, where you parse and look at all the inflation, but at the end of the day, you have to aggregate, which is the importance of the month-over-month statistic that we're going to see February 14th. I mean, it's just, to me, there's really no other data point. Mortgage applications, John, came in positive.
Oh, did they?
I don't know what that means.
That's actually interesting.
Did things pick up
Why
again?
is that interesting?
Neil Data of Renmac is making the argument that maybe things start to pick up again, Lisa, and you've seen that in payrolls, you've seen that in the non-manufacturing ISM. You run the risk, I say run the risk. The Federal Reserve, it might be a risk to them of it happening elsewhere too.
Well, if you have mortgage applications starting to pick up, this is basically a symptom of rates coming down and people flooding back in. The weakness hasn't really been there. It's just been people looking for a better entry point, and that's the issue, right? People thinking, okay, well, if financial conditions soften just a bit, ease just a bit, well, then all of the dynamism that you see for all the pent-up savings will flood back into some of the areas that have disinflated so far.
The disinflationary process has started, according to Chairman Powell.
In goods.
In goods. That was a qualification yesterday, and maybe that continues. Maybe it doesn't, because we barely talked about China reopening, Tom.
Well, yeah, with China, you mentioned Baidu earlier with the moonshot, and I just think there's all this mix. We're going to talk to Lisa Shallett about this in a moment. We're just, as you said, John, we're hanging on the data, including Michigan on the 10th, onto the CPI data as well.
You, Mitch? Did you get a phone call? I'm not sure when the survey is.
No, I didn't get the phone call, but, 5 to 10-year inflation off the Bloomberg terminal is 2.9%.
Yeah.
That's called disinflation.
That's called calling 500 to 600 people and saying.
Who do you think is most likely to get called between the three of us?
TK.
Why?
TK gets the call. He'd keep them on the phone for so long. Can you imagine? I just want TK to get the call just for my own entertainment.
He knows.
And I wanted to record it.
With a camera,
I'm the only one with a little home. Lisa, I have the phone that it rings.
Do you understand about the history of inflation expectations? Can I tell you?
Yeah.
Where it comes from?
Yeah, that's what Tom's going to say.
That's how the phone call.
The rotary phone.
Can you just pick a number, sir?
He's like, let me lecture you. Where'd you go to school?
I'm not going to guess, but
let's save ourselves.
Just down half of 1%.
John, a data check. We're back down to 80 basis points, 210 spread. I'm sorry, bond market's talking. That was interesting with Ed Hosseini about the 2-year yield, 4.45%.
Yield's down a couple of basis points, Tom. 365 on a 10-year. Still looking at 440-ish on a 2-year. Equity's a bit softer, Tom. We're down 0.5% on the S&P.
A joy. She is Chief Investment Officer at Morgan Stanley Wealth Management. Lisa Shallett here, knowing that things have changed. There is a yield, and that means cash has value. Lisa, we were talking before the show about you're outside of prospectus where you've got maybe 10% cash, whatever that movable feast is, to portfolio to portfolio. But the Morgan Stanley audience wants to hold more cash than that. Why?
Well, look, I think that there's a huge amount of uncertainty out there. I think that we've been cautioning against the fact that we think that this is yet another bear market rally, that if we were going to really materialize a soft landing, we would not be seeing negative earnings and year-over-year compares, and not negative earnings guidance and negative earnings revisions. So, I'm heartened that maybe our clients are taking our cautionary view to heart. They're also embracing for the first time in, literally 6, 7, 8 years, a livable fixed income yield, meaning net of the expected inflation by the end of the year, which may be sub 4%, gives them a positive real yield, and they don't need to take any duration risk. So, we've got folks piling into things like certificates of deposit, like money market funds, which, I know in many eras were not considered sexy products, but are satisfactory for a lot of investors right now.
Lisa, do you think that's wise to take on a product that maybe you have to think about where to deploy capital in a year or two, where yields just aren't at this level. Lisa, how do you advocate for taking maybe a little bit more risk, maybe taking on a little bit more duration, but locking in these interest rates for a whole lot longer?
Yeah, so look, I mean, I think that there's an argument there. The problem is right now we've got an inverted yield curve. And so you're not really getting paid any extra yield for taking on some of that duration risk. And so what we've said to folks is, look, let's be patient this year. Ultimately, if we get this mythical soft landing that everyone seems to be betting on, then that yield curve is going to invert. I mean, is going to re-steepen, I should say, I'm sorry. And that means your the longer end of the curve is going to give you some higher yields. And so let's stay ultra short duration right now. Let's see how the year plays out and see if there's opportunities to kind of roll up and lock in for longer some of those higher yields.
What are the biggest inconsistencies right now in markets? And I ask this because a lot of people have been saying that bond markets are hearing what Fed Chair Jay Powell is saying, the actual words, whereas stock markets are just hearing that he said disinflation a couple times.
Yeah, I couldn't agree more. To us, the U.S. equity market is fighting the Fed big time. There are some major disconnects in how the equity market is positioning itself. We saw, a huge short covering rally. We saw, a low quality dimension to the rally. And now most recently, we've seen cyclicals outperforming more defensive stocks. What's precarious about that is that we have almost all the cyclical linked indicators, meaning recession linked indicators, like the index of leading economic indicators, which has really plummeted, and yet it's disconnected from this cyclical outperformance. So, I've heard the theories that people say, yes, we understand what should happen, but we're going to look through it. I don't know how far their crystal ball goes to look through it, but history is not kind to these kind of, massive disconnects.
Lisa, I just wanted to finish on something that's getting a ton of attention at the moment, so bear with me as I work through the issue. There are these things called zero-day to expiry options at the index level. It's getting a ton of attention. Julian Emanuel of BTIG, or rather of Evercore now, wrote about it. I've got to get used to that, Lisa. Of Evercore. He said this morning. He said, you had a 1.5 to 2% bull-bear-bull sequence yesterday. Why? Because zero DTE options trading has become an important marginal price setter. He said this, Lisa, and I'd love your response to it. Look at options volumes yesterday, dominated by 0 and 1 day to expiry SPY options. And higher rates have caused this unintended consequence as people have moved out of 0% money market funds, deposited at places where they can get 4% interest and take 10% of their capital and trade options virtually for free every day. How do you respond to that, Lisa?
Look, I do think that we're in a period of time where there are some of these speculative excesses going on. And, Tom mentioned that we were chatting before going on air. And, right now, this issue of excess liquidity in markets, of huge piles of cash, still sitting on the sideline, it is there. And while Chair Powell did not want to address the realities of the fact that over the last 4 months, financial conditions have massively eased, he has not answered the question. The reality is we're seeing these bizarre perturbations in markets, this speculative activity, Jonathan, to your point, this use of options and this willingness to take these kind of, very high turnover strategies. And to me, that's an indication that, liquidity is at play, that market stability is going to once again raise its head as an issue that if Chair Powell doesn't want to talk about it, potentially some of the other governors who actually look at the data may start bringing up.
Yeah, Lisa, that's great. The only reason I put up with Farrow is he perfectly explained that options insanity we're seeing within 1 day. John, you perfectly explained that, and it so harkens back to a time Lisa and I remember where there was actually a value to cash. That's really what this is about, is Taleb talking about the gravity's returned, and so is the idiocy that you explained.
Hey, Lisa, thank you. It's great to catch up, as always. Lisa Shallett there of Morgan Stanley. A couple of headlines for you from CBS. The Vice President, Kamala Harris, speaking to CBS right now. The President Joe Biden, intends to run in 2024. Now, the next headline says, if Biden runs, I will be running with him. So there's a lot of ifs, buts, and intentions there, and I think we're still waiting for the same thing, aren't we? An official announcement. This is how you dance around it without saying it. You let the man himself say it for himself, right?
I guess so, but then why even, okay.
I think it's always like she said it, but then like it was just like,
John, pass me the surveillance cork, please.
You've got a box full. Futures down 0.5%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Ukraine's President Volodymyr Zelensky is in London, where he met with Prime Minister Rishi Sunak. Now, they discussed expanding British military aid. Zelensky's also expected to meet with King Charles. Right now, he's addressing the House of Commons. Bloomberg terminal users can watch that on LiveGo. The death toll from those earthquakes in Turkey and Syria has now risen above 11,000. Thousands more are trapped inside buildings that collapsed. Turkish President Recep Tayyip Erdogan visited the disaster zone today. President Biden's State of the Union address foreshadowed what could be his re-election stump speech. The president highlighted accomplishments on infrastructure, climate, and consumer protections in his first 2 years in the White House. But there was heckling from Republicans on Social Security and Medicare, the border, and other issues. And Uber posted fourth quarter revenue that beat estimates. That suggests rising inflation hasn't kept consumers from hailing a ride or ordering more takeout. Uber's revenue soared 49% in the last 3 months of the year. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
% is the global standard, and that is our objective, 2% as measured by the PCE index. And that's not something we're looking at changing. That isn't going to change. My guess is it will take certainly into not just this year, but next year to get down close to 2%.
Chairman Powell yesterday Not making too many headlines, no big changes. Equities rallied off the back of it. Futures this morning down 0.5%. That's the equity story in the bond market. Yields still elevated at the front end. This move off the lows of last week through 440 on a 2-year. It sticks. In the bond market, yields come in just a little bit across the curve, down a basis point or two on a 2-year to 445, let's call it. On a 10-year, down 2 basis points, Tom, to 365.
Right now, we're going to rip up the script. We're very good at doing this, and we do it with a world-class expert on the issue of Hollywood and the rest. Michael Nathanson with us, who wrote a brilliant note on Disney a number of days ago, but we've been overcome by the news flow. He's with SVB Moffett-Nathanson this morning. Michael, you absolutely nailed the streaming failure, that the experiment would not provide profit. The Wall Street Journal reports this morning that Warner Brothers Discovery has just flat out blinked. Forget about all the happy talk. You've been to those dog and ponies where they talk about we're all going to merge together, and they've said no. They're going to keep Discovery separate. Why are they reneging on everything of the last year's plans?
Because, Tom, there's no overlap between HBO content and Discovery content, right? We've done a ton of work on this. There literally is no overlap. Maybe 10% of the market is unified. So putting Discovery content on HBO doesn't move the needle, right? So they have a niche service at Discovery Plus. They don't want to lose it by merging with HBO. I don't want to drive any new value at HBO. So that strategy is not going to work. And we always question, it's just such a hodgepodge of content, Tom, that it's best to keep it separate. But it doesn't solve any of the problems, which is that linear is declining rapidly, and there's not a big enough solution to offset that decline of linear economics in streaming for Discovery.
What is the time urgency for a company with 65% debt, or for that matter, the time urgency for the many streamers, John knows them better than me, that don't have critical scale? What's the immediacy here in 2023?
Yeah, we've labeled this the third act of streaming. And we think the next 1 or 2 years, your conversations today about the cost of money will affect this. When you look at the balance sheets of these companies and their cash generation, it's shocking, actually, how little cash they produce, even Walt Disney. So they have to use the next 1 or 2 years to consolidate, slow down content spend, raise pricing, right? They need to change the dimension of their business quickly. So I think it's 1 or 2 years, and that's the third act, right? Things will have to change, and it's to the benefit, I've never said this before, to Netflix. Netflix will now ride off into the sunset victorious because they've come through this, and now they generate cash, and their balance sheet is not as bad as everyone else's balance sheet. So it's pretty good.
Let's talk about what you expect from Disney after the bell today when they report earnings. You talk about consolidation, and you say that some of their biggest non-forced errors included the acquisition of 21st Century Fox, bidding on cricket in India and other sports that were non-primary for ESPN. I'm sure that will be a controversial call on your part. What kinds of consolidation or closures or layoffs are you expecting from Bob Iger's Disney?
Well, Lisa, I'm not expecting any numbers today. I think they're still going to work through a plan to give us cost savings. But the real question is, they changed their vision of Disney Plus. If you go back to the first Investor Day, they had a smaller vision, 35 to 100 million subs. And then during the middle of the pandemic, about a year later, in December 2020, they gave you a much grander vision of over 250 million subs. That's going to have to be ramped back, right? So I'm expecting a more sober outlook on the addressable market here. As part of that revisit of what the opportunity is, I'm expecting a reduction of the long-term spending they need to do to get there, right? So it's, to me, an honest discussion, which wasn't being had the past 12 months, about how much you need to spend in streaming, and isn't the business big enough at this point in time to start trying to drive better profitability, right? So I'm looking for a tone shift on investment spending when it comes to streaming. Not actual numbers yet, Lisa.
So just to build on that, for years we were talking about content is king. You're willing to borrow whatever kind of money you need to invest in whatever kind of production you need to. And now we're seeing, one production of a major franchise after another, whether it's Bond, whether it's whatever you want to do. And that's really the main output. What is the new mantra after content is king?
Well, it's platform is king. So you set me up well for that, right? You have to have a scaled platform, distribution platform. You need to get the critical mass of enough people with a minimal amount of churn. And then I'm not sure content's king anymore. There's a lot of average content that's sticky just because you have this scaled base where people come in every day to take a look at something, right? So you need to scale. At this point, they're a 3 to 4 scale company, and why content's no longer king is there's too much content, Lisa. Like there's too many platforms, and at some point you need to ratchet that back. Maybe content will be king in the future. Right now, it's platform, it's scale.
I get some desperation out there, Michael, which frankly you've spearheaded research on, where Disney's taken the first episode of Mandalorian, they're going to put it out on cable or whatever they're going to do. But the bottom line to your enthusiasm about Netflix's editorial is Mandalorian is not Wednesday. That's the heart of the matter. It's still about making hits that John Farrell will watch at night, right?
Right, but Tom, you also need to scale it, right? You basically need, we've been saying this for years, Netflix has this constant, shooting model where they're basically putting shots on goal every day. The media industries don't have a model like that. They pick their franchises, they build them, they let them out slowly. Netflix has a model that's really hard to replicate. I don't think it's a great model, as you know, I've said that for years, but these companies can't get there because their balance sheets are too restrictive. They can't produce $17 billion a year of streaming content with a continual, release schedule every day of new binge titles. It's not a model they can get to.
Michael, how do we get revenue for some of these streaming industries? Is it through just pay for a subscription, or is this going to start to be more of an advertisement-driven model?
Yeah, Lisa, it's going to be a bit of return to what they had. You'll see people using Windows, so people go back to putting movies in theaters, shockingly enough. They'll have to raise prices, which just happened last month with Disney and Netflix. Well, Disney raised prices. You'll have an ad tier. But I think you're going to see everyone start driving higher and higher revenues through pricing and advertising, and then also using windowing to try to offload the cost of the content in older windows, right? So this experiment to put everything at once in streaming the way that Warner's did it and Disney has done it has to be reversed. And that's what you're going to hear, I think, in the next year. Yeah.
Michael, can we get you in the studio soon?
Yeah, with Moffat.
Yeah, totally.
We've got to make that happen.
with Moffat.
Drag Moffat in too.
There's no space.
I've got to
for it.
talk
What's he going to say?
Facebook
We'll make
next time,
space.
too.
I'll get up and leave.
That would be great. I would love to hear what you have to say about Facebook.
Get 2 for 1 in your seat.
Yeah,
Make that happen. Michael, thank you.
Michael, thank you.
Michael Nathan's in there.
He's gone.
Of SVP
You guys
Moffat
were busy.
Nathanson. Did he run?
Yeah, I think
But
so.
this is what he said there. This is really important and frankly more germane than all this economic babble we talk about all day. He's saying the idea that they throw 10 episodes out at once, because John, you binge this stuff, right? The answer is it's done. It's not economically intelligent.
Oh, clearly it's not.
Yeah.
You've got to roll it out, especially when you can get a 1-month trial and just watch the whole thing.
Right. The
and then walk
Discovery
away.
upset today, the
speaking
German
from
story.
No, I'm just saying you can do that if you want.
No, true.
I believe the
Everyone who
Shark
knows me
Week.
knows I don't watch TV, just news and sports.
The Shark Week channel is like $6 something a month.
Do you watch that? What is that?
No, I don't.
How do you know about the Shark
I have a
Week
Zenith black and white
channel?
and in the walk up it's sort of tough because the buildings are in the way, and I move the
I
antenna
grew up
around.
with one of those.
And I move the antenna around, and sometimes I can get Yankee
I
baseball.
used to
That's
have one of
about
those in my bedroom, yeah. Just a small TV with the
Well, this
antenna
is a
on top.
bigger one. It was like 12,
would you watch?
14 inches.
The sport, football, yeah.
We would watch, my father had this, and he would watch Doctor Who on Saturday nights.
Yeah, exactly.
That's how that works.
A lot
Three
about my
Stooges
I used to
childhood.
sneak upstairs and try and watch the end of the Champions League football, which was always on a weekday.
Yeah.
So you'd have to go and watch the European Cup games very quietly. And the TV was in my parents' room.
Ooh.
So you'd sort of sneak in there and turn it on. And
They didn't notice that you were kind of adjusting.
Well, they were
that.
You know
downstairs.
the deprived childhood I had? My
What's that?
father was so anti-TV, he took the channel changer off the TV, put a pair of pliers up there and said, and you can't use the pliers or you'll electrocute yourself. I'm not kidding.
Could have just
That's what your
moved
dad
it.
did.
Yeah, my mother would get the pliers out to watch Gunsmoke.
Some of the
That's way
stories
it
I hear
worked.
about dads. I've got this
I
great
had a
story of
smart childhood.
one of my best friends. His dad used to tell them that when they heard the ice cream van, it meant the ice cream man had run out of ice creams.
That's brilliant.
How good is that? How good is that?
That's scarring.
Live from New York, this is Bloomberg.
many people recognize you because you have a very famous hairdo that I've asked you about before. But to some people, they may say, well, Ken, what happened? Where did that hairdo come from, and where is it gone? Because right now it seems a little different than what I've seen before.
Yeah, it's growing out a little bit, David. But COVID, I ended up with hair going back down to my shoulder, and I finally realized that one of the things I had to do, I'm a very loyal person, and I used to have hair down to my waist in my college and my hippie days before that in Ann Arbor, Michigan, and I had it cut off in the summer of '75, and I've gone to the same person, now a grandmother many times over, who was a young gal cutting hair in Amherst, Massachusetts, and I still seek her out, and I finally just said to her, COVID's enough of a change that I ought to be able to do something new.
News breaks. No one covers the world like Bloomberg.
Return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt, with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority.
Bloomberg Surveillance, Jonathan Farrow, Lisa Bramowitz, and Tom Key. Mr. Farrow's on assignment. Lisa Bramowitz and I pick up the pieces here. How many Fed speakers today, Lisa?
I didn't even count.
8,
We've got
9,
something incredible.
whatever.
Yeah, they're all lining up to give their 2 cents after yesterday's
In the
Powell
next
discussion.
hour, John Williams of the New York Fed will speak. He will speak as an authority and a public official. We'll do one better. Joining us, and let's get right to it right now, with William Dudley. He is a former New York Fed president, preceding John Williams. He writes for Bloomberg Opinion. We are honored by that. And most importantly, he has led an incredibly consistent and cogent debate of how we need to get used to higher interest rates. We need to get used to a more sustained inflation and do something about it. Bill, what do you make of the cacophony of the last 10 days? Just as an open question to a former official, your followers speaking here in the next hour, what do you make of the last 10 days?
Well, I would say it's really much ado about nothing, because at the end of the day, how the economy performs is going to determine how much the Fed does. And any disagreement between the market and the Fed is going to be resolved by the economic data. What we saw on Friday is a good example of that. We had a very strong employment report, and the market is now repriced to basically mimic what the Fed has written down in their December summary of economic projections. The market's now pricing in a 25 basis point rate hike in March and a 25 basis point rate hike in May. That's what Fed officials have been promising, so we're pretty much in alignment now.
What is the character of our disinflation? The textbooks you studied at Berkeley would be something like there's a 60s, 70s pre-Volcker inflation. There is a Korean War sharp disinflation, which the laureate Krugman wrote about just in the recent days. And then there's a whole discussion about the Biden stimulus and almost back to Friedman and a monetarist dynamic. What does Dudley disinflation look like?
Well, I think part of the problem is the debate's been muddled is because people have either put themselves in the transitory camp or the non-transitory camp. And the reality is we have some of both. In the transitory side, we had a lot of goods pressure, inflation in the goods market sector of the economy because of the shift in composition of demand towards goods during the pandemic. That's all unwinding now. But we still have quite a bit of pressure in services inflation. And that's one thing that Paul has highlighted. We need to get services inflation, ex-housing down. And we're not going to do that until we have more slack in the labor market. The labor market is basically the tightest labor market in memory. And that is not consistent with a 2% inflation outturn. So the Federal Reserve needs to push the unemployment rate up, generate more slack in the labor market, get wage inflation down. And only once they have done that can they be confident that they're going to get inflation back down to 2% on a sustainable basis.
What's the role of financial conditions on that process of disinflation?
Well, the financial conditions are sort of the way that monetary policy impulse gets translated to the real economy, right? So if the Fed raises short-term interest rates, but nothing happens in terms of the bond market and the stock market, it's not going to have much of a restraining impact. So it's really important that the rise in short-term rates affects bond prices and stock prices. That's how the Fed grabs the real economy. We see that in the housing sector. It's the rise in long-term interest rates, the rise in mortgage rates that's really cooled off housing. That's how the Fed gets traction on monetary policy. I think Powell basically is not that disturbed by the, marginal easing in financial conditions we've had over the last few months, because he knows that if the Fed keeps going, financial conditions probably won't ease much further, and the Federal Reserve will actually be able to get control of things.
Well, this isn't really important, Bill. Basically, you're saying it doesn't really concern Fed Chair Jay Powell, because he thinks that when they actually enact tighter financial policy, the markets will adapt and adjust. In other words, stocks will fall, and you won't get the same kind of rally that you saw in January. That's a different message than the market's taking away, which is that he doesn't care. Can you explain why you have conviction around the view that he just knows that eventually they're going to realize and they're going to see the light?
I think part of the issue here is that there's a lot of uncertainty about the economic outlook. So Powell isn't really sure how much further he has to go. So he's not really sure if financial conditions are off where they're relative to where he needs them to be. What he does know, though, is that he controls the policy rate. And so if he needs to slow the economy down more, he can just raise policy rates higher, or he can keep them higher longer. And that will tighten financial conditions and do the job. So the Fed's in control here. I mean, financial markets can think whatever they want, but at the end of the day, the Fed Reserve is going to write the script based on where they take the federal funds rate.
Bill, there's a guy out in San Francisco a number of years ago who had stars in his eyes and developed R and then R starred, and now we're talking about R starred. You watched the ascent of John Williams and his great respect within monetary economics, and now he sits in the chair you had in New York. Explain R starred and its importance in this cacophony that we're living in right now.
What we're trying to do is figure out what level of short-term rates makes monetary policy restrictive. So to do that, you have to have some notion of what's neutral. In other words, how high should nominal federal fund rates be to have a neutral monetary policy? And that's where R star comes in. R star is an estimate of what the neutral interest rate is after adjusting for inflation. And R star came down in the last 10 or 15 years. It was running 2% prior to the great financial crisis. Now it's around, probably somewhere in the 0 to 1% range. But you have to have a notion of where neutral is before you can think about what's tight.
Right. Well, if that's the case, do we have a confidence in our meaning-to-meaning monetary theory, given the effect of technology, the effect of demographics, the effect of larger factors that Olivier Blanchard's writing about now? Do we have a confidence the formulas work?
Well, I think you're pointing out the fact that there's a lot of uncertainty exactly where neutral is. And so the Federal Reserve is essentially trying to push monetary policy to saying that they're confident that they're in restrictive territory. They probably don't know how restrictive, but they're confident that they're in restrictive territory. As long as they're in restrictive territory, that will slow the economy and bring inflation down. Now, if it turns out that R star was much higher and a 5% nominal federal funds rate wasn't enough to push monetary policy into restrictive territory, the economy wouldn't slow and the Federal Reserve would ultimately have to do more. So the uncertainty about R star translates to uncertainty about how tight does monetary policy have to be, how high does the federal funds rate have to go, and how long does the Federal Reserve have to keep it there.
That dovetails perfectly into Friday's labor market report that really shifted the narrative for at least the bond market.
Bill nailed that. Bill was out at 500,000.
But this really raises a question of whether it was material enough to shift your view of how high R star has to be, how high the terminal rate needs to go.
Well, I think at this point, the Fed's game plan is to go to what they think is restrictive and then keep it there as long as it takes. I think, if they are faced with stronger data, I think it's more likely that they extend the timing of how long monetary policy is restrictive, as opposed to keep raising the rate higher and higher. Now, obviously, if the economy stays really strong, then they're going to revise up their forecast of what interest rate peak is necessary to slow the economy. But I don't think we're there yet.
But do you think that
5 to 5.25 is still where they're headed, and then they're going to hang out there for a while? If the economy stays strong after you get to 5 to 5.25, then you could see them move even further.
I remember we used to talk about the improbability of a soft landing, the improbability of getting this to land in some sort of nice way. And now that's the base case. Do you push back, or do you think that it looks more and more likely that we could get some sort of immaculate disinflation or a soft landing?
I think it's still unlikely. I mean, I think it's true that we're not going to go into recession anytime soon. The economy just has too much forward momentum. If you look at the Atlanta Fed Now, a GDP Now forecast, they revised it up by over a percentage point just in the last week. So they're looking for 2.1% growth in the first quarter. Before it was less than 1%, just on the back of last week's data. So I think the economy has quite a bit of momentum. I do think, though, recession is likely in the medium term because the Fed has to push up the unemployment rate by a meaningful amount to generate that slack in the labor market. And every time the Fed has pushed the unemployment rate up by more than half a percentage point, we've always ended up in recession. I just don't see that this time is going to be any different.
Do you think that we, when we look back from a historical perspective, can write the book on zero rate policies as having ended without any sort of financial accident that was material?
Well, I think all the things that we did to fix the financial system following the great financial crisis has helped a lot. I mean, the banking system's in much better shape, much more capital, much more liquidity, stress test, risk management. So I think the financial system is stronger now. And that's why the Federal Reserve is in some way in control of the process. Once the Fed achieves its objective, it can cut rates. And so if the economy turns out to be weaker than the Fed wants at some point, 6 months, 12 months down the road, the Federal Reserve can cure that pretty quickly because they're going to be at, they're going to be at 5% in terms of rates. There's going to be plenty of room for the Fed to stimulate the economy. That's why Powell, said that, the risk of staying too tight too long is less than the risk of not doing enough because the Fed has the ability to support when the time comes.
Hugely valuable. Dr. Dudley, thank you so much. William Dudley, the former president of the New York Fed. And this dovetails beautifully, folks, as the PhD from Berkeley gives way in the next 45 minutes, I'll suggest, to the undergraduate from Berkeley. He did better than good there. John Williams went from Berkeley on to Stanford and LSE. Michael McKee joins us with a brief here. How our-starred is our morning here? All of a sudden, after the Powell soiree yesterday, the set of Fed speakers, and particularly what John Williams will say, seems to be important.
Well, the thing about Williams is he is the president of the New York Fed, which makes him the vice chairman of the Open Market Committee, not the Board of Governors, but the Open Market Committee. And by tradition, the vice chair does not dissent from the chairman. And so whatever Williams says basically mirrors what Jay Powell is saying. In this case, we've had Powell speak first. So I wouldn't expect a lot of deviation from John Williams in his remarks today.
How much does tone matter, though? How much did Jay Powell basically sound a hawkish message with a dovish sort of calm tone that perhaps markets took the wrong way?
Yeah, it was kind of interesting. I asked you yesterday when we were on the air what they should have said. And that's the hard part because they're saying what they mean, but I guess the tone hasn't been strong enough. Williams is not somebody who is going to come out and pound the table. There are other people on the Open Market Committee who might do that. I think he will probably push the idea that the Fed is not done yet, but I don't know that he's going to say to the markets, you're wrong.
Give us a view of claims tomorrow. I'm still not used to under 200,000. Is it a fully employed America?
Well, it's definitely a fully employed America. I mean, by any measure, the amount of friction in the labor market, the number of people who are just changing jobs on a regular basis is very, very low now. You can see that in the unemployment rate of 3.4%. Now the question is what's been happening with the people who are getting laid off? A lot of them, the announcements have been made, but the layoffs haven't come yet. And it appears that a number of people are getting jobs at a fairly quick rate, or replacement jobs.
To the day, Michael McKee with us, of course, with all of our economic. That was, Lisa, that was just phenomenal with Bill Dudley.
Yeah,
especially.
That
was just some real serious theory.
He was saying also the reason why Jay Powell didn't push back against markets more is because they'll come around when they actually see what they do.
That's
interesting.
From the gentleman formerly with Goldman Sachs. We'll continue. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Turkish President Recep Tayyip Erdogan is visiting the disaster area today that was struck by two powerful earthquakes on Monday. Tens of thousands of soldiers are helping with search and rescue efforts as the death toll in Turkey and Syria pushes past 11,000. Many people are still trapped inside buildings damaged by the quakes. President Biden taunted the leader of China in his State of the Union address. The president said, "Name me a world leader who would change places with Xi Jinping." It was his most fiery reference to China in the speech days after the U.S. shot down an alleged Chinese spy balloon. House Republicans are opening their investigation into Hunter Biden and the Biden family finances. Today, they'll ask former Twitter executives about their alleged cooperation with the FBI to squash the story of the younger Biden's laptop. Democrats call the investigation purely political. Shares of Manchester United are surging in New York. The Daily Mail reports that investors from Qatar are preparing to make a bid for the English Premier League club in the coming days. Now, Manchester United has been the focus of speculation since last year, following news that its U.S.-based owners were considering a potential sale. And in the NBA, Los Angeles Lakers star LeBron James has broken the league's career scoring record. His jump shot against the Oklahoma City Thunder eclipsed the mark of 38,387 points that was set by Kareem Abdul-Jabbar. Now, tickets for the game sold for as much as $80,000 in the secondary market. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Some Republicans want Medicare and Social Security to sunset. I'm not saying it's a majority. Let me give you, anybody who doubts it, contact my office. I'll give you a copy. So, folks, as we all apparently agree, Social Security and Medicare is off the books now, right? They're not to be funded. All right. We got unanimity.
The festivities last night, led by the President of the United States, Mr. Biden, of course, Vice President for Barack Obama. And Lisa, this is really the high point for me, which is not the idiocy of our political dialogue, but how do these speeches get written?
I assume it
by
is.
Committee?
I assume that there probably is some of that, because we heard about that, right? Brian D. sort of gave a nod to this idea that it's probably a lot longer than it will be, and that's just part of the process.
We'll be bipartisan here. He is a Democrat. He worked for Ted Kennedy. He wandered through the White House of a guy from Chicago. Cody Keenan joins us now. Former chief White House speechwriter for President Obama. Cody, thrilled to have you here for Republicans and Democrats. How many people are in the room when you write a speech?
Ideally, one.
Yes, I'll go with that.
That's
but what's the reality?
The reality is that Brian Deese was one of, just bar none, the best people to work with on this thing, because he has an amazing political and communication sensibility. But there are a lot of cooks in the kitchen. I'd meet with every single cabinet secretary. You've got people staking out the bathrooms trying to get me and get their policy positions in there. You've got every outside organization trying to get their piece in there. So I felt a lot of sympathy for the speechwriters going into this.
The Obama speeches hearkened to Lincoln. There was an integrity of the Civil War, of the word freedom. But what I remember is a better history, a better life. Does Joe Biden have an equivalency? Does he have phrasing that harkens back to what you guys did for President Obama?
Yeah, absolutely. I mean, the two of them have very different styles, both writing and speaking. And Joe is just President Biden is just very into...
No, excuse me. With Bloomberg surveillance, you can call him Joe.
Carry on.
President Biden.
You saw, I like that he used the phrase blue-collar blueprint instead of some over-torqued, hackneyed phrase, because, he feels that, right, from growing up in Scranton. I thought the best parts of the speech, he's got this empathy to him, he always has. And the best parts of the speech were when he was talking as a son who had a father who fell in hard times, as a father who's lost children, as a president who cared about everybody. Those are the parts that really soared.
As a speechwriter, do you like it or do you hate it when they go off script?
Both, because it's always a high wire act. We worked so hard on every draft. I mean, President Obama would be involved down to the syllable for a speech like the State of the Union address. So when you go off script, it's always like you just kind of hold on real tight. But the last night, I thought it worked to the president's advantage.
A lot of people are talking about whether he's going to run in 2024. There were some comments on CBS this morning from Kamala Harris talking about Biden running again in 2024, and then if he ran, she would be his vice president. She would run with him. What do you think is the feeling, and what do you think is the calculus that perhaps other people aren't hearing about when it comes to that?
A couple things. People forget now, but back in 2010, 2011, there were Democrats saying maybe we should run somebody other than President Obama. It sounds weird in retrospect, but it was true. Democrats will always come home, so I'm not worried about that at all. I thought one thing that was interesting about last night was his energy level and the whole vigor thing. In a lot of the preview pieces, there was kind of this sheepish appendage. I was like, people be watching to see if he can deliver a speech. He went longer than any of Obama's 8 State of the Union addresses, with more energy than I have at 10 p.m. In my defense, I have a 2-year-old, but I think it made him angry.
Yeah, I felt the same thing about the energy. I want you to give advice to our Republican listeners and viewers. Let's assume there's some form of new Republican voice out there. How do the Republicans get the next voice that they need to have to find the next language that conveys their message?
I actually think it's pretty simple. I don't know if they'll take this advice or not, but I was watching the response from Governor Sanders, and I think the Republican problem is they can no longer give a speech to an audience outside the Fox News bubble. They don't speak to the middle of America anymore. There was a lot of, kind of coded culture war stuff in her speech last night that I think most people tuning in, I don't know what this is. I don't know what she's talking about. And I think until they find somebody who can kind of speak to the middle of the country like that, they're going to have some problems.
Well, we were talking about this earlier, and it becomes really difficult because when media talks to a Democrat, often Republicans will close their ears, or when the media talk to a Republican, often the Democrats will close their ears. What is the solution to a less sort of tribalized politics going forward?
We tried that for years. In every State of the Union address, we would be criticized for including a big section at the end about unity, about a better politics. People would say, why are you wasting your time? You just got to keep working at it.
I was at the post office watching the shock of the Democratic elite the night your mentor, Ted Kennedy, limping, got up on stage and introduced a guy named Kerry to the Democratic Party and the American public. They were stunned over that John Kerry victory. Are we at a sea change now that you see within both parties where we're going to be as stunned as we were when Ted Kennedy introduced John Kerry?
Maybe. I don't know. I think both parties are going through big generational shifts.
Yeah.
You saw kind of the backbencher shouting last night. I think one of the things that's changed is there's sort of this fame seeking, that you can get on social media and whatnot, where it's less about governing.
Right. Did you read Strunk and White? I mean, is that how you got here?
Long time ago, yeah.
Okay.
No, I went to work for Senator Kennedy just as a young policy aide, and I fell into speechwriting. I was on the floor at the convention in Boston the night that...
I'm just asking for my kids. They can't write a damn thing. Strunk and White works still, right?
It does, but actually reading is the best way to become a better writer.
That sounds like Brahma 101 there.
100%.
There we are.
I have 4 editions of Drunk and White, though, so you can't underestimate that, too. E.B. White's fantastic.
Mine were all given to me by Matthew Winkler. Cody Keenan, thank you so much.
Thank
Greatly
you.
appreciate it. He was a speechwriter for a senator and a president of a long time, not a long time ago, but of the past as well. We are looking at markets that are really extraordinary, Lisa, with futures at -20. And, the shoe to drop to me was, as John mentioned, the way the markets recovered yesterday afternoon. I didn't expect that.
Does the melt up end when the Fed actually raises rates again in March, like it seems probable based on a lot of the speaking? And that's the reason why, as we head into the 9 o'clock hour, we're going to be really keeping an eye on John Williams and what he has to say, whether the tone in which he says it changes the message that Jay Powell tried to deliver yesterday.
And I would go back to the adjustment seen over the weekend, which is all of a sudden, to borrow a phrase from, off of what Cody was saying of the Democrats, the Republicans coined it Morning in America from a long time ago. I'm sorry, 3.1% GDP for the year end was an extraordinary statistic which confounded everybody's built-in gloom out there.
There is a perversity to this discussion, and it is deep.
Out there.
There is a perversity to this discussion, and it is deeply uncomfortable to have a conversation about how bad it is for there to be such an employed America, right? I mean, it's a great thing for people to be getting jobs and for people to be getting salary increases. It becomes complicated when we try to look at what's next, and it's never been more complicated to see.
We talked about this earlier in the show today, but let's go there. Delta Airlines, Ed Bastian taking control, saying the pilots get 8.5% a year over 4 years. They're in negotiation on that. I should point out, pop 5%. I believe off the article that Bloomberg reported on, Bloomberg reports 5%. Everybody.
5%, all non-union workers get a 5% raise this year, following a 4% raise last year. And this comes as the service sectors still have this stickiness. I mean, they need people. You can't, John says this all the time, you can't fire people you didn't hire, you couldn't hire. And you see that in a lot of these sectors. When does this shift? I mean, do you see any kind of demand destruction in airline tickets? I don't.
Well, I've been more optimistic on the experiment than a lot of other people. I'll go back to Jim Glassman at J.P. Morgan, who's perhaps been more prescient than anyone I know in all of his conversations, as you point out. Every single conversation he says is they worry about this, they worry about that, but for themselves, it's how do I retain employees? How do I find the next marginal employee?
So how does a gravitational force of money that actually
you nailed
gives
it.
Something?
What are we going to do with a 5% one-year T-bill? We're not there yet, but I'm sorry, Lisa, the short-term paper market, the Ira Jersey world, to me is incredibly prescient right now. Witness farther out, the 2-year yield, wow, 4.46%.
Well, and John raised this question of the options trading, the spin-off of the cash that you get from investing in short-term debt. Does this actually have a disinflationary aspect, or does it, for the moment anyway, encourage some of the spending?
Yeah, I'm not willing to say it's disinflation. I'm willing to say it's a conversation from another time and place.
It is.
I need wider lapels, and yes, I wore a bow tie back then.
I don't think anyone was asking that question. I think everyone knew.
We thank our team for great agility today on the news flow, particularly with Michael Nathanson, Moffett Nathanson. John Williams will monitor that important statement by the head of the New York Fed. Stay with us. This is Bloomberg Surveillance.
The complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, one MDB wouldn't have happened. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
What about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies. And I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for these subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
Make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them, and so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value, and the kind of transparency that they want.
Are you seeing a labor shortage right now, and what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
A ton of Fed speak this hour. Live from New York City this morning. Good morning, good morning. We'll bring you those comments from the likes of Williams in the next 15 minutes. In just a moment, equity futures down 0.5%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, coming up, Fed Chair Jay Powell sticking to script, President Biden taunting China's leader, and eBay and Zoom, the latest to cut jobs. We begin with the big issue. It's all about the data.
Look at all of the data. The data we saw Friday, the extremely strong data.
The data right now, the services data. Powell essentially is telling us they're data dependent. That's the data dependent Fed. They're figuring it out as they go along. How largely stuck to the communication of last week's post-meeting press conference.
He basically said, all right, you guys want to play data dependent? We'll play data dependent.
Now he can let the data guide them.
We have a big CPI report coming up next week.
That CPI print is kind of a sneaky risk event.
We need to keep a close eye.
Chair Powell trying not to change too rapidly as the data come in.
The Fed is not going to be beholden to any one data point.
And then you have the market, which of course is going to change very rapidly.
Let's get right to it with our panel. Evercore's Julian Emanuel, Invesco's Rob Waldner, and gents, I want to start with this quote from Mike Gapin over at Bank of America. Volcker has left the building. The Fed is embracing painless disinflation and hopes it continues. We're not in Wyoming anymore. Rob, what do you make of that?
Well, I think, Jonathan, it's quite interesting because he embraced disinflation during his speech, and I think you played a couple of pieces about how data dependence is there. So what they're doing is they're looking at recent core. I think recent core CPI has been relatively tame month on month over the last several months. But I think he highlighted that this disinflation process is going to be slow and I think a bit bumpy. So I think we're in a little bit of a period here where we got some really good inflation news. We think overall we will get disinflation this year, but we could get some more bumpy inflation news over the next several months. So it's not clean sailing for the markets. You know, if we get worse inflation news, the Fed will be back and we'll get nervous, I think. That's certainly what I heard from him.
There has been a change, though. Julian, I think you'll appreciate this. For much of the last 12 months, we had what many people thought was a Fed call. Has that Fed call gone now?
It really has, or it's softening at the very least.
But look, it all goes back to Friday. I would suggest that Chair Powell was as surprised as anyone at the extraordinary strength of that NFP number, and surprised as anyone that the labor market has remained as resilient as it has. And frankly, what it all adds up to is sort of a path where, if you think about it in the context of Ed Hyman, Ed is as convinced that the economy is as strong now as he is as convinced that a recession is on the horizon late this year or early next. And if you're not confused, you're probably not paying attention.
Well, Julian, let's talk about it then. Is there a window, an investable window, between that strength now and that recession you ultimately expect? Is there something to get long in between? And how big is that window?
So for us, this is a process, okay? We expect 2023 to be a year of volatility. It's already proven that to be the case, despite what the VIX is saying. If you look at individual stocks, stocks down 70% over the past year, up 90% or more in a month. That's volatility right there. And for us, it's really discipline and sticking to a stock picking mentality, staying close to your home and close to what you know, with one eye towards risk management, which means eventual managing the downside, which we do think is still part of the unwritten story for 2023 before the new bull cycle begins.
And potentially managing a recession, a hard landing, a soft landing. Torsten Slok over at Apollo has really pushed this idea that maybe we have to think about a no landing scenario. He wrote this morning: from hard landing to no landing, investors have been underperforming their benchmarks because they entered 2023 underweight equities, expecting a slowdown that still hasn't happened. Rob, when's that slowdown happening?
So we think it's better chances than not, Jonathan, that we don't actually get a recession. We get subpar growth. And I think that's kind of what we've been having for a while here. We've had sort of potential or slightly below potential growth. We think we'll get that in 2023. But, the labor market continues to show incredible strength. The details of that labor market report were strong. And at the same time, wages are not showing signs of spiraling upward. So you don't get the Fed panic. So, we think it's an environment where for the year as a whole, it's probably pretty friendly for public markets, public fixed income in general, but we'll be range trading for a while. It's going to be a little bit messy as we get, as I said, noise around inflation.
So, Rob, if that's the case, do you like treasuries at 445 on a 2-year, 366 on a 10-year? Does that all add up?
I think, Jonathan, over the balance of the year, it does. We would be looking for this 10-year right now to be in a range of 3.5% to 4%, something like that. So, you're kind of in the middle of the range. But over the year as a whole, we expect inflation to end the year much lower than where it is now. And we expect the Fed probably to be moving towards cutting rates. And so, fixed income overall offers quite a lot of value on the year as a whole. But of course, we started off, it's a real boom this year, Jonathan. I mean, we're up over 3%. We were up over 3% in fixed income.
Yeah.
So we could get a bit of a range condition for.
Well, Rob, I was going to say to you, I'm not sure that statement carries the same weight as it did maybe 6 weeks ago. How much value is there in places like high yield, triple Cs, after the rally, the spread tightening we've seen in the last few months?
Well, I think Torsten Slok talked about people being underweight equities. I think investors came into the year underweight all risk assets. So we've seen a real, I think, has signs of a position-driven rally. So we've seen probably spreads come in tighter than where they should be. So that comes back to, where we would kind of want to enter into. So that comes back to my statement. It's probably a little bit rangy. And when we get a couple of negative inflation prints, which we're likely to get over the next couple of months, you probably get a great opportunity to reload if you didn't, get loaded up at the end of the year.
CPI on February 14th, next week. Look out for that. Yields come in just a little bit today. Equity futures are down 0.5%. We need to talk about corporate layoffs again. The latest, eBay and Zoom. Zoom cutting its headcount by 15% after tripling it in just 2 years. The CEO said this: our trajectory was forever changed during the pandemic. We didn't take enough time to thoroughly analyze our teams and see if we were growing sustainably. Katie Lyons, how many times have we heard different versions of that?
It's eerie how often these messages sound exactly the same. The central thesis of all of them being we grew too quickly and now we have to adapt. And that is definitely what the Zoom CEO was alluding to there. You mentioned how they've tripled their headcount over the last 3 years. In January 2020, they had 2,500 employees. By October of last year, that number was more like 8,400. That is how quickly they grew. Now they have to adjust. And it's a similar story for eBay as well, seeing sales slow down now that the pandemic boom is over, which is why they are also cutting about 4% of their workforce, or 500 employees. Interesting to not see a positive stock reaction for either of those companies today to this news. But I would say the CEO of eBay also had a very similar message. They said the job cuts are necessary to create long-term sustainable growth. It's this idea of sustainability and maybe not being able to sustain the growth rate at which these companies were on now that the environment has softened. And we know they are not the only two companies experiencing this. We can see tech layoffs picking up. That's the white bars here on this chart relative to the other job cuts tracked by Challenger Grain Christmas. So you can see that this is really something that is happening. And it is reflected, too, as well in the economic data. Yes, we had a blowout jobs report last week, 570,000 on the headline figure. But information sector jobs actually were down 5,000 as they were in December. So it's starting to show up, John. And the question is, will it start showing up in a bigger way, considering many of these cuts are just announced? They haven't actually happened yet.
Good
so
point.
We may see a bigger translation into the data later on.
Hey, Katie, thanks for that. Let me just repeat that line. Zoom's cutting the headcount by 15% after tripling it in just 2 years. Goldman put out some research a little bit earlier this week. Sam Rowe, out on Twitter, tweeted this out. It's a fantastic chart. Here's the quote. Roughly 15% of companies in the S&P 500 have seen headcount increases of 40% or more. So that's 15% of companies in the S&P have seen headcount increase 40% or more since the start of the pandemic, and only 1/5 of them have announced layoffs so far. Rob Walder, can I come to you on that? When we think about excess, how much excess is there hanging over from the pandemic period, and how much of it needs to be unwound?
We think we've made it through most of the excess that we had in the pandemic. Certainly, if you look at the consumer side, there is some evidence there might still be some excess savings, but it's probably not in pockets that are easily tapped. So we think the pandemic, those elements are kind of behind us. What's supportive probably going forward that's picking up from that I think maybe we didn't really anticipate is that as inflation slows, just real disposable income is picking up. So as inflation slows, as gas prices come down, we're getting another little leg here for people to pick up some disposable income, which is, I think, the good news, one of the pieces of good news for the economy here.
Back in the pandemic, we talked about the casino on Wall Street. That's getting more conversation again. Julian, in fact, you wrote about it this morning. I want to share some of your work with our audience. I talked about it a little bit earlier on. You said this: we had a 1.5 to 2% bear, bull sequence yesterday. Bull, bear, bull sequence to be precise. You said why? Because 0-day to expiry options trading has become an important marginal price setter. You said, look at options volumes yesterday, dominated by 0 and 1-day to expiry SPY options, and higher rates have caused this unintended consequence. As people have moved out of 0% money market funds and deposited at places where they can get 4% interest and take 10% of their capital and trade options. Julian,
that in a little slice of the market, that actually raising rates would cause more speculation, simply because you still have the situation where that your average bank in your average money market fund is still paying below market rates because it doesn't need the deposits. So that money is moving. And frankly, when you're in an environment that is as confusing at the macro level as it is right now, and yet people still have savings and still have investing interest that they've built up almost from scratch if you go back to 2019, it's really just a natural outcropping of what can happen. And obviously the leverage inherent in those kinds of options can be very attractive when you win once, twice, or 3 times, despite the most likely outcome in a range trading market being less successful.
Julian, let's go one step further. Is this the tail wagging the dog all over again? The reason I ask is because when we see big moves like the one we've seen year to date, particularly on the NASDAQ and on the S&P 500, we might try and assign some kind of fundamental narrative to a price move, just a story. We like telling stories. How much of what we've seen, Julian, is down to what you've just described?
There's certainly large element. Is it the undue element? No, because I would say that part of what we saw at year end, albeit somewhat options driven, was really, extreme tax loss selling to where the stocks that were underperformers at the end of the last year literally had no place to go except up. Now, would we have expected those names to move 60, 80, 100% in a month? Absolutely not. Have options exaggerated that move? Definitely.
The move's been huge, that's for sure. Julian, you're going to stick with us alongside Rob Waldner. Your equity market down 0.4% on the S&P. Coming up, we'll head to D.C. President Biden ditching the script.
Some Republicans want Medicare and Social Security to sunset. I'm not saying it's a majority.
That conversation up next.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Countdown to the Close.
Welcome to Bloomberg Crypto.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
Instead of making the wealthy pay their fair share, some Republicans want Medicare and Social Security to sunset. I'm not saying it's a majority. Let me give you, anybody who doubts it, contact my office. I'll give you a copy. I'll give you a copy of the proposal. That means Congress doesn't vote. Well, I'm glad to see you. No, I tell you, I enjoy conversion.
Chaos gripping Capitol Hill, the State of the Union filled with partisan jabs. President Biden sparring with House Republicans before turning his attention to China.
But in the past 2 years, democracies have become stronger, not weaker. Autocracy has grown weaker, not stronger. Name me a world leader who changed places with Xi Jinping. Name me one. Name me one.
Let's get to AMH down in D.C. Morning, Anne-Marie.
Good morning, John. That was an interesting moment because it wasn't prepared in the remarks that we got for the release. This is Biden off script and really going right after directly naming Xi Jinping. Obviously, going into the State of the Union, of course, the surveillance balloon incident was something that was going to overshadow this. He didn't directly talk about it, but he did make reference to it. But we should say the president also took a little bit more of a reasonable tone when it came to China in the sense that he said that they want to make sure they can continue to work with China on things that make sense for both Beijing and Washington. You think of things like climate change and those kinds of talks, but also that they want to make sure that they are setting up the United States to compete, vigorously compete with China. But on the domestic front, Jonathan, of course, the viral moment was when the president spoke about the debt ceiling. And he talked about the fact that some Republicans want to sunset Social Security and Medicare. Take a listen.
Let's commit here tonight to the full faith and credit of the United States of America will never, ever be questioned. We're not going to be moved into being threatened to default on the debt if we don't respond. As we all apparently agree, Social Security and Medicare is off the books now, right? They're not to be sponsored. All right. We're ready. We got unanimity.
So, Jonathan, that is the moment this White House wants to really relish in. The president was looking at someone who the American people are for, in the sense that they don't want to see, by and large, Social Security and Medicare going away. But then you had the likes of some of these rebel rousers in Congress, like Marjorie Taylor Greene, getting up, pointing the finger at the president and calling him a liar.
I'm not sure that was the viral moment, but we'll leave that there. AMH, we'll talk about that one a little bit later. Can I pick up on this, just pushing forward? We heard from the vice president earlier on this morning on CBS. She said, if Biden runs, I'll be running with him. When are we getting the announcement?
It's a great question. So the State of the Union is behind him. He's still dealing, obviously, with the documents probe. There's a special counsel that's been appointed for that. And I think this administration would like to put that behind them before they made this announcement. But they're preparing for it. It's coming April or March. And this was part of, you know, the 2024, looking into 2024, this speech could be seen as a soft launch. Now, the argument to that is obviously the president doesn't want to be a lame duck president. So I think likely a lot of the same mission, the mission he wanted out of this speech would have been the same whether or not he was running or not. But definitely there were moments there. The real focus on the domestic agenda was something that really paints the picture for him in running in 2024. And we've already heard it from Ron Klain 2 or 3 times. It's not if, but when the president announces.
Anne-Marie, thank you. And again, happy birthday. Birthday love from the Open Team to AMH. Anne-Marie, thank you. Back with us, Julian Emmanuel, Rob Waldner. Let's continue the conversation. We can do the domestic stuff, then we'll get international. Rob, let's start domestic. It's that time of the morning. I usually reserve about 60 seconds for this conversation. It's about how long it lasts. I mention a debt ceiling, someone shrugs, and then we move on. Rob, is that how you talk about the debt ceiling debate?
Well, the debt ceiling debate is still pretty far out there, right? So it's medium-term risk, which is very hard to price into markets. But, you know, when you game this out, Jonathan, it seems like it's probably going to be messy. So that is one of the factors that, you know, I think as investors, as we get out into the ends of the first quarter, beginning of the second quarter, you know, we're going to have to pay attention to. You know, my career has been long enough where I remember the vote on TARP. And, you know, sometimes the market has to force Congress's hand. And I hope that doesn't happen this time. But I think it's a risk. There's a fear we get a repeat. On the horizon, that's the issue, Julian. In the here and now, there's this tension again between China and the United States, tension that hasn't really gone anywhere against the backdrop of a rip-roaring rally for some of these names. Listed here in the United States as well, the ADRs, the China names have just absolutely ripped. Your thoughts, Julian, on what you're focused on right now? Is it the domestic debt ceiling issue, or is it the international relationship with China?
Well, it's certainly both, and obviously they are going to be, as the year unfolds, of greater and lesser importance in terms of the headline risk. Just quickly on China, as you know, John, we've been behind the rally essentially since the aftermath of the party Congress. Those stocks, those ADRs have moved a very long way. Nothing goes in a straight line forever. We think long-term the reopening is very, very supportive, but you're likely at a pause here. Now, in terms of the domestic situation, it's very important to remember that one-year credit default swaps on U.S. sovereign debt are already bumping up against the extreme pricing that we saw at the first debt ceiling in 2011. So while we don't think that the U.S. defaults on its debt, we do think that the risk is it's going to feel that way, perhaps at a time when money supply is contracting further, leading economic indicators continue to point down, and the employment market probably starts to weaken at mid-year. All of those conspired could cause the downturn that we expect to happen eventually to happen sooner and perhaps be greater. It's definitely a risk.
The fact that CDS is even trading, I think, is a story in and of itself, Julian, and we can talk about it another time. You mentioned the Chinese names, Baidu. Let's put some numbers on a long way. That phrase, a long way, here's a number for you. Baidu's up more than 100% from the end of October. Julian, I'll put another number on things. You guys have got China GDP at 6%. Lots of people started the year saying, Julian, I want to play the reopening story. And we were saying a few weeks into 23, Julian, have we seen the reopening story play out already?
No, look at the energy market the last several days. There is a bid there, despite signs of weakening in the economy elsewhere, albeit small. But the fact is that when you think about the fullness of that story and the idea that the virus itself has really worked its way through the majority of the population in China, the reopening story is very much alive, and likely we've only seen the opening innings of it.
Julian, great to catch up to get your thoughts on a range of issues. Rob Waldner, to you as well. Rob, Julian, thank you, as always. We are about 7 or 8 minutes away from the opening bell. Equities down just a little bit by 0.5%. Big rally off the back of Chairman Powell's comments, or non-comments, yesterday. Yields come in just a little bit by a couple of basis points on a 2-year, on a 10-year. The 10-year down to about let's call it 366 on a 10-year this morning. Coming up, the morning calls, and later, a decade of free money coming to an end, putting multinationals on notice. That's the view from Bank of America's Jill Carey-Hall. She joins us at the opening bell. That's coming up shortly.
For parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek. They could be pretending they're running a store or a pizza parlor. They could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody is talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Away from the opening bell, equity futures retreating just a little bit, down 0.5% on the S&P, on the Nasdaq down 0.4%. Yesterday, decent day of gains, snapping a 2-day losing streak. Let's see what this looks like by the end of the day. That's the price action. Here's some morning calls for you. First up, Morgan Stanley upgrading American Express to overweight, naming the stock its top pick in consumer finance, given its sustainable revenue growth. That stock up by 1%. Bank of America upgrading TripAdvisor to buy from underperform, raising the stock by 2 notches as management continues focusing on margins. We advance there, rally 7%. And finally, KeyBank downgrading Sherwin-Williams to sector weight, expecting weaker demand to limit the company's valuation. That stock is negative by 1.9%. Coming up, Bank of America's Jill Carey-Hall seeing a challenging backdrop for multinationals this year. Why safe sectors are becoming risky in 2023. That conversation just around the corner.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Three seconds away from the opening bow this morning. Good morning to you. Equity futures negative 0.5% on the S&P. On the Nasdaq down 0.5%. Also a rally, a lift off the back of Chairman Powell's comments yesterday. Just retreating just a little bit right now as we get some comments from the New York Fed President John Williams. I'll get to those comments right now. There's your opening bow. Switch at the board and look at the bond market. Yields look like this. They come in about a basis point on the US 10-year. John Williams speaking at a Wall Street Journal event right now and saying the following. 25 basis point increases seem like the right size. If the situation changes, we can move faster than 25 basis points. A peak rate of 5% to 5.25, still a reasonable view. There is a lot of uncertainty around the inflation outlook. We'll pick up on those comments in just a moment. Euro dollar, the big range of the last week from 110 down to 106 and right now 107.31. We're going absolutely nowhere. On crude at 1% to about $78.13. 30 seconds into the session, we retreat by 0.4% on the S&P. On the Nasdaq, we're down about 0.4%. Also, the sector to watch at the open, it's tech. eBay and Zoom becoming the latest tech firms to slash their workforce. eBay blaming its 4% cut on economic forecasts. The CEO saying they are necessary to, quote, create long-term sustainable growth. Abby has more. Hey, Abby.
Hey, John. Well, this story goes on. We've had so many tech companies laying people off recently, and there seems to be two main reasons. One, it has to do with overhiring in the pandemic, or two, more what eBay is talking about, tougher trends. So in the former category, think of Salesforce.com, Microsoft, Alphabet, Amazon, and so on. In the latter, think about Dell, where they're talking about those difficult trends. So eBay has seen their sales decline, so they are having a more difficult fundamental background. So they're dealing with it with these job cuts. They are cutting they're cutting a number of people, 4% of their global workforce, or about 500 people. This as sales started declining in the first quarter of last year, down 6%. For this current quarter we're in, down 5%. So clearly they want to see that change. It's interesting, though, because you would think that the workforce reductions would target more the margin situation, but nonetheless, that's one strategy that they are taking. Now, relative to Zoom, it seems to be a little bit of both. They're cutting 1,300 jobs, or about 15% of their workforce, returning to 2021 levels, as you and Kelly have been talking about. It's just extraordinary. They tripled their workforce to 8,400 people between 2019 and October of last year. Now they're paring it back, but they're also seeing a reduction of use coming out of the pandemic. What's so interesting about the stock, though, John, is it's down 86% from the pandemic boom, but it's still more than a double from the IPO. So I'm guessing that they are trying to preserve some of that stock growth for sure.
Abby, thank you. Those comments keep coming through from the New York Fed President John Williams, who says he broadly sees financial conditions as being tightening a lot in the past year. Now, this, of course, depends on what time period you look at, and what you look at to establish what financial conditions are doing. Now, if you just take markets over the last few months, let's go year to date on the NASDAQ, up 16%. Take the dollar, which peaked at the end of September, negative about 10%. Look at credit spreads from the wider last year, high yield, tightened by 200 basis points. Have they tightened a lot over the last 3-4 months? That would be the pushback, but their time period seems to be over the last year. Bit of confusion around this. Mike McKee are going to talk about it in about 15 minutes. I'm looking forward to that conversation. Just to return to the price action of the moment, about 3 minutes in, we're negative 0.5% on the S&P. On the NASDAQ, we're down 0.6%. Yields basically unchanged now at the front end. The 2-year 446 on a 10-year 367. I want to stick with tech. Microsoft rallying for a second day after unveiling its new AI software, a search engine using ChatGPT to compete with the likes of Google and Baidu. The CEO, Satya Nadella, said this technology is going to reshape pretty much every software category. Kelly Lyons has more. Hey, Kaylee.
Hey, John, it's the new frontier, the new big thing, and it seems we can't go a day without talking about AI and investors getting excited about AI, which arguably is why Microsoft is positive on the day, even though we did get some arguably bad regulatory news out of the UK with the CMA taking issue with their $69 billion deal to buy Activision because they say it'll harm competition in the UK gaming market. That's why Activision is lower by about 2.4%. But back to the AI thing, this is really about making Bing and Edge more competitive. And I know some of you out there are asking, is Bing even still a thing? It has really struggled to gain traction against competitors like Google, but that is what these new products with the ChatGPT software and the billions of dollars in investment into OpenAI are trying to accomplish. The new Bing can be switched in and out of chat mode. The new Edge browser adds the AI-based Bing for chat and writing text. It can summarize web pages, respond conversationally to queries, and investors and analysts, the sell side today, seem to be into it. So that is what is adding to the gains Microsoft has already seen this year. It's already seen more than $200 billion in market value added, and this is part of a broader big tech rally we have seen in 2023. When you add it all up among those 6 large stocks we have here, $1.4 trillion worth of value gained in just over a month period, even though earnings arguably haven't been that great. And of course, for NVIDIA there, which has had about $185 billion added in value, that is also an AI play, John. A lot of it comes back to this.
Kelly, thank you. Here's the line from Williams. If financial conditions loosen, more higher rates may be needed. Fairly intuitive, but certainly not what we heard much from Chairman Powell over the last week or so. Again, Mike McKee's going to drop by the studio and we'll talk about this. So you Google, you don't Bing, and you Uber, you don't Lyft. Uber this morning beating analyst estimates with ridership and driver base hitting an all-time high. We ended 22 with our strongest quarter ever, with robust demand and record margins. The pandemic's impact on our mobility business is now well and truly behind us. Mandeep Singh, this stock is flying.
Look, I think when you look at the print, obviously there's a lot to like here, but the most notable thing for me is they're able to grow supply in the marketplace by about 35%. Now, what that tells me is not only is inflation a tailwind for their business on the pricing side, but it's also helping them on the supply side, because remember, a lot of people are looking to supplement their income, and Uber seems to be that place where they can do that. And that's why I feel like with any marketplace, if you see supply growing in line with top line, that's a very healthy sign. And also they've improved their execution in terms of cutting costs, the incremental margins are going up. And finally, you're seeing some synergies between their ride sharing and delivery, which is their Uber One subscription. So a lot to like in that print. The one more thing I would call out is their ad business. They said it's a $500 million run rate. Now, that is, even though it's a side thing for a company of Uber size, over $30 billion in revenue, but still it's a very high margin business. So I think that's why you see that, optimism around
Mandeep, at times we used to talk about streaming and say there could only be one winner. Who would it be? Maybe it would be Netflix. In this space, when you see the success of Uber in this quarter, is it at the expense of Lyft?
To an extent, I would say it will come at the expense of the smaller players, and not just Lyft. I mean, this market is so fragmented. For the last 2-3 years, you had got a lot of niche players. And look, there are certain players that have carved out, scale. For example, Instacart on the grocery delivery side, but DoorDash on the food delivery side. But still, I feel like Uber with its scale and on the supply side, I think that's going to be a big advantage and something to watch out for. I mean, one data point doesn't make a trend, but clearly they seem to be executing very well on the supply front.
I'm just looking at the year-to-date performance, and Mandeep Singh, thank you, sir, from Bloomberg Intelligence. Uber's up almost 50% year-to-date. DoorDash up 31%. Lyft is up 63%. Year-to-date, these names have been flying. For the broader markets, 7 or 8 minutes into the session, equities are lower by 1/3 of 1%, just about off the lows, early days, and the Nasdaq down by 0.4 of 1%. Bank of America's Jill Carey-Hall sounded the alarm on big US multinationals, writing the following: cyclical and secular challenges face the sector, this is tech, amid the reversal in 10 years of free money, a pause in globalization, and a massive COVID demand pull forward. Jill, I'm pleased to say, joins us right now. So, Jill, you guys have written about this, so talk to me about it. The globalization beneficiaries of the last decade or so, do you think there needs to be some kind of valuation for multinationals to derate?
Well, I think you've seen, you know, as you said, many decades where S&P 500 companies' margins have expanded on a secular basis, and you know, globalization was a really big driver of that. Lower costs from offshoring, lower labor costs, lower taxes overseas, and you know, we were in a backdrop where tech and growth stocks were the leadership, and we think that in the next cycle we could see some new leadership. You know, many of these stocks benefited from free money, zero interest rate policy. You know, they saw that secular expansion in their margins. You know, and even after the recent layoffs, we're still seeing that, you know, labor is still bloated relative to sales growth at many of these companies. So, you know, earnings have missed for tech this quarter. We've seen NASDAQ earnings come down relative to S&P 500 earnings, where after, you know, many decades the opposite was true. So, you know, we see challenges for tech going forward. It is a cyclical sector. We saw a lot of demand pull forward during COVID, but it is a sector that tends to be more cyclical during recessions. And we think if we do go into a recession this year, which our economists are expecting a mild one, this could prove to be a more cyclical sector.
Jill, a couple of points there. Let's pick up on the first one. Earnings have missed, but the stocks have rallied. Jill, can you explain why?
Look, I think there was a big, you know, positioning and sentiment-driven rally this year. We had pointed out late last year that sentiment had gotten very negative on the market for the first half. And as we moved into January, we saw that kind of positioning reversal. If you look at what sectors have done well this year, it's been, you know, kind of the exact reversal of what did well last year. And, you know, many of the sectors that won last year have done poorly this year. So, you know, some of the misses this earnings season have been underperforming. There's obviously also been optimism around, you know, China reopening, potential for soft landing in the U.S. So, you know, we think those have been some of the drivers of the rally in January and year to date.
Can I pick up on that point, Jill? I think it's a really important one. Your point as a team pushing back against maybe the valuations of multinationals. How do you pair that with the thirst, the hunger right now to get exposure to a better international story off the back of China reopening?
Sure. Well, I think, you know, the multinationals will certainly have some tailwinds in terms of the global economic backdrop in China reopening, in terms of, you know, just if the dollar, we see some reversals there. But overall, I think they've benefited from some of these trends that we've been talking about for many decades. And, you know, on China reopening specifically, obviously some areas like materials and commodities have rallied on the China reopening expectations. We think the recovery there will be more consumption-led, so, you know, perhaps some different beneficiaries than the typical China recovery story.
Clearly, the overwhelming feature of some of the research for you guys over the last few months, Jill, has been the margin pressure. Is there a shelter from some of those themes? Where do you find that shelter?
Yeah, so I think so. We're definitely seeing cross currents within the margin backdrop. So, you know, no question we think earnings and margin expectations for the overall market have been too lofty. We do expect earnings estimates to come down further this year, even after the you know, large amount they've been slashed heading into this earnings season. We're looking for a 9% decline in earnings year over year, which is about half of the typical earnings decline you'd see in a recession, given our expectations that if we do see one, it'll be mild. Consensus is still looking for slightly positive growth. But I think there are, you know, a number of companies and sectors within the market that, you know, could see some margin benefits this year. You know, areas like some of the consumer staples or home builders where you're seeing, you know, lumber prices or many of the input costs reverse. So we think this year is definitely going to be less about macro, more about cross currents in the market, and it's going to be a good environment for, you know, picking stocks and sectors, active management.
I want to finish on this line here from you, because I teased it. Risky sectors are safe, safe sectors are risky. Help us all understand that, Jill.
Sure, I think, you know, when you look at sectors like tech, they've actually seen their beta go up, and tech is one of the higher beta sectors, whereas if you look at some of the sectors that are traditionally riskier, higher beta sectors like financials and energy, they've actually seen their betas decline a lot over the last year and enter some of the now lower beta sectors. So I think, you know, risk profiles of some sectors have changed. You know, we've seen that within small caps as well. You know, small cap healthcare is one of the areas within small caps that I've been relatively more cautious on. Typically, you want to own healthcare in a recession, but healthcare in small caps has deteriorated dramatically in quality. 60% of that sector in small caps is non-earning stocks. So I think there are some shifts we've seen in sectors that, you know, the typical recessionary playbook may not necessarily apply, where, you know, financials looks a lot more like a high quality sector relative to how it looked going into the financial crisis. You know, energy companies have you know, are much more disciplined now. They're morphing into free cash flow generating companies. So we're definitely seeing a lot of shifts in sector risk profiles.
Hey, Jill, I've really enjoyed reading the research, particularly over the last month or so to start the year. Jill Carey-Hill there of Bank of America, alongside Savita Subramanian, putting out some brilliant equity research in the last couple of months. Want to get you a few more headlines. Alphabet, Katie Lyons, you talked about Microsoft. Alphabet getting hammered in early trading.
Yeah, we're down about 5.5% right now, so just off of session lows, but could be the worst day for the stock in some time. And this is about this AI competition and race to introduce these products. We were just talking about Microsoft making the investment into OpenAI. Google is also trying to do this with its own search engine with their AI chatbot Bard. But Reuters is actually reporting this morning that in an online advertisement for Bard, it was delivering inaccurate answers, which maybe is why we are seeing such a down move for the stock right now, considering everyone seems to be rushing to put out this technology. If it is inaccurate technology, obviously that puts you at a competitive disadvantage at a time when Microsoft is ramping this up, Baidu is ramping this up. We're seeing millions and millions of dollars in funding going to various startups in this space. It's a race, John, and right now Alphabet doesn't look like they're out front.
The spread between those two stories, those two names right now, fascinating. Katie, thank you. Microsoft up by 3%, Alphabet down by about 5%. Coming up, Fed speak, picking up following last week's decision.
We're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time.
We'll get you the latest comments from the New York Fed President, John Williams, with Mike McKee up next.
Names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
My grandfather got into the mutual fund business because the average investor could not get a diversified stock portfolio, and it was too dangerous to put, you know, your entire savings in just a couple of companies. So the mutual fund was created to give a diversified expert management at a reasonable price. Today, we have a phenomenon where companies are waiting much longer to go public. And so in 2000, the average company went public after 3 years. Now, companies are waiting 9 to 10 years because there's so much money available in the private markets. As a matter of fact, they're half the number of public companies that there were in 2000, and there's 5 times the number of private equity-backed companies. So just from an investable universe, you look at the private markets, and it's you know, significantly bigger. So the question is, that return that used to be captured in the public markets is now captured in the private markets. But the problem, as you know, is you're really tied up for a long time when you invest in a private equity fund. And so trying to figure out a way to solve the same problem my grandfather was trying to solve, which is how do you bring those returns responsibly, the democratization of the private markets to the retail investors. And I describe it as a bit of like running with scissors. Scissors is a great tool if you use it appropriately. And so we're focused on trying to figure out responsibly bringing it in to the average investor.
The complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, one MDB wouldn't have happened. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
We're just at the beginning of this process. The disinflationary process, the process of getting inflation down, has begun. It has a long way to go. These are the very early stages of disinflation. It's not going to be, we don't think, smooth. It's probably going to be bumpy. This process is likely to take quite a bit of time. My guess is it will take certainly into not just this year, but next year to get down close to 2%. We think that we're going to need to do further rate increases, keep rates at a restrictive level for, for a period of time. The base case is for me, is that it will take some time, and we'll have to do more rate increases, and then we'll have to look around and see whether we've done enough.
Chairman Powell, for the most part, sticking to script yesterday, setting the stage for a busy week of Fed speak. New York Fed President John Williams speaking right now, saying moments ago, we still have work to do. If financial conditions loosen, higher rates may be needed. And going on to say this, Mike, just a moment ago, putting a timeline on a period of time, maintain restrictive stance for a few years. That coming in just moments ago.
Yeah, a restrictive stance, though, might be lower than 5.25%. He did say that he still thinks that a 5.25%, what the Fed thought they would be at when they did their last dot plot in December, is still a reasonable view. And he came back saying, basically, as Jay Powell did, still have our work cut out for us. We are barely into restrictive at this point, and a 25 basis point increase seems like the right size. And then adding, as you just mentioned, that looser financial conditions might imply they have to go higher than 5.25% if inflation remains sticky. And that's the big question is, they don't know exactly what's going to happen, and Williams basically saying, we're data dependent. We're going to follow what the data are telling us, and that might mean we go higher, that might mean we stop at 5.25%, but he did suggest it's going to stay there for a while, which is the base case message from the Fed. And it seems like the markets are finally listening. When you look at the yield curve over the last week, from last Wednesday, that's the line on the bottom, to today, the white line, you can see that markets have priced in higher rate level all across the curve. And it does appear that maybe they got the message. You did mention there's a lot of Fed speak out there today. Barr, Bostic, Kashkari, and Waller yet to come.
Can't wait.
And we have Lisa Cook speaking now, although nothing's hit the wire from her yet. So I guess basically we could have simplified this and just handed out a piece of paper to all of them that should come out and say, yeah, what he said. That Powell guy.
What she said, what he said, and what they all said. Mike, I want to finish on this. There's been some pushback around financial conditions. All of this depends on how you measure financial conditions and over what time period. John Williams, moments ago, said financial conditions broadly have tightened a lot in a past year. Mike, the chairman took some criticism on Wednesday when he made similar comments in the news conference. Where are you on this debate?
Well, as you say, it depends on the time horizon. If you look at financial conditions from the time the Fed started raising rates in March of 2022, then yes, they've tightened significantly. Over the past 3 or 4 months, they have come down. It just depends on whether you think financial conditions are slowing the economy enough, slowing inflation enough. And at this point, the Fed isn't sure. Even though they've come down, we have seen inflation come down. So they're going to keep an eye on this. And of course, next Wednesday, we've got the CPI.
Mike, there's a feeling they don't care about the equity market in maybe the same way they did in the summer. Would that be the correct read?
Or for the last couple of years, yeah. It's like mom used to like me, but she doesn't anymore. The Fed is.
Are you talking about equity market bears being looking up to Chairman Powell's mom?
Credibility question, and they say they need to keep rates high long enough to keep the inflation rate going down. It's been a long time since they had to do that, and people on Wall Street weren't around then, and so now it's going to be a test of wills. Who can go longer, the Fed or the markets, hoping for a Fed put?
Mike, thank you. As always, appreciate it. About 22 minutes into the session, we're lower by 0.5% on the S&P, and the Nasdaq down by 0.6%. Just to lift the lid on the index and break it down sector to sector, here's Abby.
John, very interesting sector action today, only because of the decline that we're seeing right now, relatively modest, yet most sectors for the S&P 500 lower, some of them significantly. Communication services in particular down 3.2% on that Alphabet fall that you and Kelly were talking about on the AI competition. We also have utilities, consumer discretionary, staples and industrials down there. So lots of defense down. On the year, though, take a look at these travel sectors, airlines, hotels, railroads, and there's Uber, as we were talking about, up 44% this year.
Abby, thank you. That's your sector price action. The broader index down 0.4% on the S&P. Your trading diary up next.
On the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Close to 26 minutes into the session, equities taking a little bite out of a big year-to-date gain on the S&P and on the Nasdaq too. Equities right now down about 0.5% on the S&P, still up on the year by about 8%. On the Nasdaq, close to 16 percentage points higher, lower on the session by 0.8%. That's the price action. Here's the trading diary. Coming up, Fed speak, Barr, Bostic, Kashgari, Waller, all on deck. Cook talking right now. President Biden discussing the U.S. economy at 2 p.m. Eastern time. We get earnings after the bell from Disney, another round of jobless claims tomorrow morning, and we end the week with a UMich sentiment survey to close out Friday and get straight into the weekend. Live from New York, that is it for me. Thank you very much for choosing Bloomberg TV. Good luck for the rest of the trading day. This was the countdown to the open. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority.
DOJ or other authorities
could face bigger challenges next.
Was going to keep rate World Cup. This is a 3.
As the economic picture does. The BOK is getting ready to make
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance, they say, is to build up pressure on Pepsi. And so you see people marching in the streets. So we had mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid